The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed it out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
All right, everybody. Welcome back to another live stream. What is today? Today's Thursday. Happy Thursday, everybody. Thank you for being here with us on another stream. Today, I'm joined by a special guest and, of course, the man behind the curtain when it comes to supporting what we do here at A1 Trading. Today's video sponsor, or live stream sponsor, I should say, every day's sponsor is DNA Funded. DNA Funded, of course, has a wonderful team of people behind the scenes, and we thought it might be a nice idea to get a chance to meet one of those people who is making the whole thing possible. So without further ado, we'll say hello to David from DNA Funded. Hey, David, how you doing?
Yeah, good. Thanks for the invite, Nick. Appreciate being on here.
Yeah, and I think, you know, a lot of people, when it comes to the prop firm space, they're looking for that transparency, right? They're looking for firms that have not just, you know, the best prices and challenges and rules, et cetera, but rather they actually get to know for an opportunity to meet the people behind the scenes that kind of run the show. I know that when I browsed around for potential sponsors in the funded route, right, for the channel, my primary objective was to find credibility and a company that has it. So we've got a couple questions here that I think will help the audience get to know a little bit more about DNA Funded and the team behind the scenes making it all possible. So we're going to jump into some questions. We'll go through them. And in the audience, I just want to go ahead and give a little bit of a teaser here. We are going to be doing some giveaways throughout this question list. So stay tuned, be patient on it because they're coming. But we're going to be giving away 2 25K challenges completely free to the audience. All you have to do for a chance to win is stay tuned in, listen for a little while here, and you might catch the promo code that will get you, of course, that significant free 25K challenge. So David, again, long intro there, but tell me just a little bit about yourself and what you do at DNA Funded and kind of the philosophy you wanted to drive going into this space.
Yeah, so as everyone knows, I'm David. I'm the head of partners for the DNA Group and also the acting general manager for DNA Funded. So really my role is all about sort of long-term relationships with key partners, making sure that those partnerships align with the broader business goals. In the acting general manager role at DNA Funded, I really sort of work on the company's strategic objectives. You know, I'm in charge of ensuring that the growth remains consistent and sustainable. And I'm also looking at how we refine operations, improving internal processes, and really sort of making sure that each part of the business is moving in the same direction. With regards to the philosophy of why we wanted to, or what we were sort of looking at when we were going into this space, and when I sort of got approached, I sort of sat the team around in a room and I said, you know, it doesn't need to be complicated. We want to make this, you know, we want to find pillars that we can work with. And so we actually agreed that there's really only 2 pillars that is going to be able to define us from day one, and that's trust and community. For us, if we can build a brand that effectively allows our traders to genuinely trust us, and that we actually place real value on the community, then really everything else sort of comes together: growth, reputation, long-term success, and they all naturally follow. We don't like to complicate and having all these extra, we're going to do this, we're buy by this. It's, you know, those 2 key things really sort of drive what we want to do, and that's our ethos.
Yeah, and I think that's big. I mean, again, in the last few years, David, I mean, I've seen from my perspective, like 10 years ago, the prop firm trading space was like non-existent. It was really small. And nowadays you have so many prop firms that have kind of sprung up. They're all over the place. And so I think that's actually a really good baseline, right? This concept of the best way to really build a brand in the funded space is to build it off of transparency and trust, because again, there's so many that do not do that, that it does make you stand out. If you know, you're not going to try and necessarily compete. I mean, you guys are very competitive in other aspects, pricing, et cetera. But if you're also going to really focus on the trustability factor, I think that's big. Speaking of, you know, what makes DNA Funded stand out, what does DNA Funded offer to the prop firm space that helps them stand apart from other firms in your view?
So that's a good question. So it's twofold. You know, first off, I want to say part of what makes DNA Funded really sort of stand out internally, a lot of people don't actually see it, is really how cohesive the team is. One of the biggest aspects of the DNA Funded team is everyone actually goes above and beyond. There are so many people that actually go and puts their hand up to help out on things that they're not even, you know, trained to do. They just want to see DNA Funded succeed. I think that for us it's huge, because there's just that unwavering belief. And the other factor is we don't want to be complacent. We don't want to be comfortable. We don't want to rest on our laurels. You know, we're doing well, but we always believe we can always do that much better. You know, so we look to continually evolve things such as, you know, small things, whether it's on the dashboard, providing more information, through to really large projects such as introducing instant funded tournaments. We're working on a new product to launch into the market in the next few months, a new platform that we're hoping to launch in the next month or so. So it's really just all that sort of incredible hard work that goes into it that really sort of makes DNA that firm that's the next step.
Yeah, and going off of that, you know, in terms of adding tools and features and kind of staying, as you mentioned, continuously innovating and adding new things, you guys also offer some pretty awesome trading platforms for traders who are using DNA. Of course, from the trader's perspective, that's a big one, right? The right tools, being able to mirror what would otherwise be a trader's natural place of trading for the most part. You guys offer some cool platforms. So in terms of trading platforms, what can traders trade on DNA Funded?
So DNA Funded unfortunately has one platform at the moment, which is TradeLocker. But TradeLocker is actually an excellent platform. You know, it actually gives a lot of flexibility and power to traders. It's intuitive. It's got a very clean interface, and it's very welcoming to both new and inexperienced traders. Yeah. In saying that, though, we are working on wanting to provide greater offerings, and so that new platform, when it launches, it's a big deal. We're really excited for it, and it's also another one that we believe it's excellent for the traders. It provides the simplicity and the customization that traders want. Sorry,
Sure.
Excuse me.
Yeah, no, I think that's big, is having, you know, the tools, the platforms that traders want to have in order to do their best trading. I mean, at the end of the day, that is what the service is all about, is giving traders a chance to scale up what they're doing and to improve kind of their overall trading journey through a service and firm like what you guys offer, which is really cool. In terms of, speaking of which, I know this has been all the rave, this new concept. You guys in the chat, let me know, but from what I've seen, it seems like instant funding is kind of taking the world by storm. A lot of people are interested in this concept of instant funding and kind of bypassing as much of a, you know, two-phase challenge or one-phase challenge, like this instant funding challenge. Now, of course, you know, in the sake of being transparent, obviously from the business perspective, the price has to slightly increase. You guys are still really competitive with your instant funding new prices. But tell us just a little bit about, obviously, when you do, you know, for the viewer's perspective, firms, they have a slightly higher price for the instant funding option, just because, again, think about this. If you were to hand out your money to some random trader off the internet, two phases gives you a little bit more of some data on that trader, but an instant funding obviously inherently brings a higher risk. And so there is a slight premium to a service like that. But again, DNA has some really awesome prices in terms of across all their challenges. But can you walk us through the new instant funding option? And what is the max you can get funded across the different challenges at DNA Funded? Just tell us a little bit about what you guys offer across the board.
Yeah, no, absolutely. So with the instant funded, sorry, apologies, I'm tripping over my tongue there. With the instant funded challenge, we sort of sat down in the room, and one of the things that we want to make sure is it doesn't deviate too much from what the current offers are. There's a lot of companies that will make a lot of rule changes, put a lot of limitations on, and it's it's not a nice experience when you go from something that is a normal challenge to an instant funded that you think and hope is going to be relatively the same. That it is a completely different playing field. In saying that, there is one major difference between our challenges and an instant funded, and that's of course going from balance-based drawdown to trailing drawdown. It does make that model slightly harder, but it is industry standard, and it's one of the things that we utilize as well as the rest of the industry to ensure that risk management is there, because you're missing the challenge phases completely. With challenges, traders basically on the 1 phase and the 2 phase rapid challenges. No, sorry, 1 phase and 2 phase can go from 5K to 200K. Rapid challenge, which is a 10-day challenge, goes from 10K to 100K, and the instant funded 5K to 50. All up, total max allocation you can have with DNA funded 600K across the board. And that's a huge amount of capital that you can effectively trade with and profit from. I forgot to answer one of the things that you asked me before, and that was an advantage of DNA funded. And I really wanted to say that one of the biggest things with us is we actually offer 800 plus assets due to our relationship with DNA markets. There's not very many props out there that have this many assets in that range that you can actually go and trade with, and it really allows the traders that come to DNA funded to go to the specialized area that they know best to actually be able to have the best chance of passing and the best chance of making money. And we want to support that.
I love that. I mean, I think it's really cool because, again, the goal with any prop firm when people are looking around, the goal is to find something that can kind of make them feel at home with their own trading. So that is awesome. And also, speaking of awesome, we've got a special giveaway we're going to do here really quick. I've got our first code. So I hope everyone at home is ready. Get your typing fingers ready, because we're going to drop one free 25K 1 phase challenge coupon in the chat. So I'm going to do that here in just a second. Again, I'm going to give everybody a heads up. We're going to drop this here in just a second. The promo code, you just enter it in at the checkout, and it will make it so that it is a free thing here. And I'm also going to get you the link. So here is the link. Hold on, here it comes. So we're going to hit send on that. Should be in the chat now. And then here is the link to explore. Make sure you use that link that has just been dropped in the chat. So simply use this link. And again, it's first come, first serve. So someone grab it. It's yours, up for grab. You can also scan the QR code that you see in the top right hand of your screen if that is easier for you. But there you go. We will be doing a second one, so stick around in case you don't get this one. There's a second chance that will be coming on later in our interview. So without further ado, you mentioned it there, David. I think it was actually a really important thing that that you mentioned there. DNA Funded is backed by DNA Markets. Why is this important for DNA Funded and for traders trading on your platform? Why does this matter?
Yeah, so a lot of people think that the broker backed is just a buzzword in the actual industry. For us, it is actually really important for who we are, because as you know, DNA Markets is based in Australia, same with us, which means we actually operate under the ASIC oversight on the financial space. What that actually entails is for us to have a very strict compliance and best practice standards across the actual financial space. And with that, what it actually means is we have to be really rigorous with our KYC process, our reporting, as well as fund management, and ensuring that that level of care and structure is compliant with all the regulations within the Australian market. And that's what you guys benefit from, is to ensure that things are done correctly and there's no corners cut.
Sure. Yeah, again, a huge benefit. And part of the reason, David, again, when we were exploring, and you know, I say this not just to make you feel special, but kind of to make you feel special. We have a lot of choices of who we choose to partner up with and sponsor across our content. And DNA Funded was much more of an obvious choice to us, given you guys' involvement with DNA markets, right? Again, think about just, this is my perspective, my opinion on this is like, you know, if I go out and I partner with a prop firm that is, you know, run by just an influencer who doesn't really have any sort of business professional background, that makes me nervous, you know, whereas if I can work with firms that have teams of people and professional backgrounds and they're in the brokerage world already, again, from a trader's perspective, that's who I would prefer to choose. And from a content creator's perspective, I'd much rather partner with somebody who has that professional background. So, you know, that is just a little personal anecdote as to why, you know, we are so happy to work with you guys in terms of sponsoring content. What are some of the things that are off limits for DNA funded accounts? Of course, with every prop firm, there are no-nos or things that you can do, you cannot do based on house rules. At the end of the day, it's house money, house rules. What are some of the things that are off limits for DNA funded accounts?
Yeah, so you know, I mean, no one likes rules. Everyone wants to be able to trade in the way that they need to. Our rules are really there to ensure that, you know, it's fair for all parties involved, including us, to ensure that, you know, payouts are sustainable and the company is sustainable. You know, in saying that, we want to try and ensure that you have the best options available to yourself. Instant funded accounts, we don't actually allow EAs or algos at all. So it's all manual trading. However, for our phase 1, phase 2, and rapid accounts, absolutely you're allowed to use EAs. We do ask that you don't use certain strategies like high frequency trading, reverse arbitrage, you know, hedge-based tactics. Think of it as anything that allows you to potentially exploit pricing delays, system vulnerabilities, that sort of stuff. If it just protects everyone involved.
Sure.
If you do want to have a bit more of a look, check out the FAQ section on our website. We also have our rules and conditions link at the bottom of the website as well.
Yep, there you go. And also, just for those in the chat who are mentioning that the coupon is not working, that is because it's already been claimed. So you got to be quick. We've got a second one coming. That was we're giving away 2 here on the stream. So stay locked in. Be ready for the next one. We are continuing on with our questions. We're getting close, and stay ready. Again, coupon is not applicable because it's been claimed. So we have a second one coming.
That's correct.
But yeah, someone already got it. Okay, let's keep going here. DNA Funded has some interesting rules, such as the 5% profit cap for your first 3 withdrawals and your 40% profit distribution rule. Why did you guys implement these?
Everyone comments about these rules. Look, it's, you know, one of the biggest things about traders, and you'd be able to attest to this, Nick, is emotions run high when you're trading. You know, you're on edge. You're thinking about when you need to sell. You're looking at fluctuations. You're trying to read the candles, and you know, all it takes is a little bit of a spook, wrong click, a bad trade, and you're emotionally invested. What actually happens is you go from a real high to a real low, and you can effectively lose everything. That's one of the biggest reasons why a lot of traders struggle, is that emotional roller coaster ride that they go on. What the 5% profit cap is designed to do is to basically allow you to go, I know my target, I've hit my target, and I can take a step back, and I'm going to get paid out. And what we hope it does is it reinforces good habits. If you're paying us money, we want you to get money back and then some. You know, because the whole idea about it is for everyone to succeed. So it's there. It creates a good habit. It's only there for 3 times. And then away you go. 40% profit distribution, a little bit different. It's really sort of designed to protect high risk behavior. It's like going to the casino and going all on black.
Sure.
We want to take that away. It's a gambling sort of situation. We do have anti-gambling rules that we have to abide by, being broker backed. So that's part of it. Excuse me. So it's really to be able to help with traders' consistency on consistently being able to make a profit and being more accountable to the actual trades they're making and not just hoping for a big win. On the reverse side, absolutely, it is also to help us create sustainability for our firm as well and support long-term growth for fair payouts basically across the entire community.
There you go. Yeah, I like it. And again, that's another thing that's a subtle thing too, is when it comes to the prop firm world, the trader's best interest, like a good trader's best interest, is that the firm makes money and that they make money, right? You want something that works for all parties so that it is sustainable. So that makes a lot of sense. Okay, guys, we're going to do the second one. So let me just reaffirm the rules here. We're going to give away a second free 25K challenge for DNA funded, courtesy of our friend David here, setting us all up with some free stuff. You're really popular here, David, because you're giving away free stuff. We're going to drop the second promo code. Let me just remind you that if it said the coupon is not working, that's because someone already claimed it. So fair warning, you got to be quick with this. So here comes the second one. First come, first serve. One person gets it. So just want to make that very clear because people always get confused by that stuff. So there you go. 25K coupon 2. There it is. That's the second one. A1T _ all those letters. Type that in, click that link, take advantage of it, and first come, first serve on that one. Okay, so there it is. There is you can read off the screen and grab it. Whoever gets it, gets it. And don't go anywhere because we still got cool stuff coming for you. We got one final extra secret at the end. Okay, where were we? Yes, DNA Funded recently launched tournaments. How does someone register, and does it cost anything to join? By the way, those tournaments look like a lot of fun.
Yeah, look, the tournaments are really cool. It doesn't cost you anything to join, and you could literally join the tournament for whatever reason. You want to test a new strategy, you want to just see how well you go against yourself, or really sort of compete. We have 750K worth of challenges that we give away. Tournaments are run monthly, or once a month, sorry. They run for 2 weeks. So basically, a tournament will start around the 15th of every month or the first Monday of the third week. So do look out for it. We do let registrations open 14 days before the tournament. But it is, it's a lot of fun. We do ask that you do be a little bit respectful on your nicknames because they will be displayed. So we may, if there's something poor has been put in, we may ask you to change that. Outside of that, we are looking to expand tournaments in the future to have cash prizes. So stay tuned for that. And we are looking at, of course, specially themed tournaments as well. So I can't say more. They are in the works, and it'll be pretty exciting when we launch it.
Cool. Yeah, I'm sure there's a lot more coming where that came from. So that's really awesome. Okay, so now, again, this is the fun part. Again, David is the popular free guy as well as giveaway guy. He's like Santa Claus here down from Australia, which is awesome. Okay, so do you have any special discounts that you could offer live stream viewers? And again, for regulars, just a heads up, DNA Funded is always sponsoring our shows. You can always find special giveaways, but this one, we got some special stuff. So tell us about the special discounts you've got for our wonderful viewers here today, David.
So DNA Funded just started its birthday celebrations. I apologize if you go to the website. We haven't actually jazzed it up to show it, but our actual birthday celebrations have started from today onwards. What that effectively means is that any purchase of a challenge or a funded account will go into the draw to win a cash prize of $5,000 as the top prize, or your share of 950K worth of challenges and funded accounts. For today, I'm really excited to say that we're working with A1 Trading to give a 50% discount for any purchases on any challenge for the next 24 hours. The coupon code that you would need to use is A1 Trading 50. So, whether you buy a 5K challenge or you go up to a 25K challenge, that will go into the draw to be able to be eligible to win that. The prizes for that will be drawn on the 28th of November as well.
Awesome. Yeah, so there you go, guys. Let me just make sure I get this right here. Make sure I don't leave any spaces. There we go. Okay, so as you heard, you got 50% off. Now this is, you said 24 hours, right, David?
Yeah.
Okay, guys, so 50% off with the promo code that you see right here, A1 Trading 50. If you scan the QR code in the top right or click the link that's been dropped in the chat, that is your chance to pick up all challenges 50% off for the next 24 hours. So that's not, forever, but 50% off is incredibly generous. And of course, generous to sponsor our work as well here, David. We really appreciate just what you guys are doing over there. I think you're really setting up a great spot for serious traders. And I'm really glad that you took some time to share some insights with us here, the community, on our streams. And thanks so much for coming on, man.
Look, it's a pleasure. Really enjoy being on. I look forward to the next time and bringing some more goodies to share with you guys.
Yeah, like I said, you are going to be real popular. Anytime people see your face, they're going to start smiling just inherently. So
maybe make fun of the accent.
Yeah, well, the accent's cool. People make fun of my accent too. They're like, "Oh, you sound." Although, real quick question, David, can you tell? So I'm from the South. Can you tell that I'm from the South at all?
No, I'm sorry.
No, it's okay. I'm always curious.
Look, from an Australian's point of view, when we differentiate the two, we would expect someone from the South to be a lot more drawn out when they talk.
Yeah.
You're not, and I think that's just it's just because of the way that we've been sort of conditioned to view it. It's like you guys think that we all talk like Crocodile Dundee.
Right. Right. No, it makes sense. No, there's definitely some much stronger accents out for both sides. But David, again, thanks so much for coming on. I won't keep you anymore. I know it's late where you are. Again, special thank you to David for making the appearance and all the great goodies. Thank you so much for that. And we'll see you on the next time you're on.
Awesome. Take care, guys. Thank you.
See you, David. Bye. All right, guys. There you go. There you have it. Let me just set up my screen here. Give me 1 second. We're going to get things rolling here. That was awesome, man. That was really cool. Again, special shout out to the DNA Funded team and our friend David, who just hung out with me there, handed out some goodies. I hope, well, we gave away two coupons were claimed for free access. And then we also dropped this banger 50% off all challenges for DNA Funded for 24 hours. Incredibly generous. So thanks to them. With that said, kind of back to regular show hosting here. We'll kind of push on here, get things headed off in the right direction with the trading side of things for the day. The dollar index is strong this morning. What else do we have going on? Stocks are lower. We had Tesla earnings that were not great, but also could have been worse. Take a look at Tesla. Pre-market down about 3.6%. I saw the options market had a 7% swing expected. So we're expecting 7% up or 7% down following their earnings. We did not get that. So the market makers won again on that one. Anybody who sold puts, sold calls, you probably did very well on Tesla puts or Tesla calls if you sold them, because we got a very minimal. I mean, you got to understand when you're talking about Tesla Motors, man, that stock, say what you want about Elon, but one thing about him is super volatile. His companies, SpaceX, Tesla. I mean, these things are, highly speculative. Tesla, the thing is, right, when you're talking about Tesla, is it a profitable company? Yes, but it's priced so ridiculously expensive because a lot of people have a lot of faith that companies like Tesla are going to change the world, that they're going to build robots and electric vehicles. They're going to take over the world and robo-taxis. And admittedly, I'm a believer. I've owned Tesla on and off. I've traded in and out of this stock. In fact, believe it or not, of everything that I've ever traded, Tesla is the most, where I've made the most profit out of anything. And not just out of trading gold, trading NASDAQ. I'm saying of anything. I have traded Tesla as a proxy for the NASDAQ over the last 5 years and made more profits through Tesla than anything else. Kind of a fun fact for the day. I like the underlying story of Tesla, but Tesla has never for me been a buy and hold investment. It's always been a trade. But there are times like back in April right? And I would encourage you, if you're a trader who is interested in you're willing to take a little bit of added risk. I'm not saying necessarily Tesla, and none of this is financial advice, but you can explore things, because here's the thing about Tesla. The reason I like trading Tesla is because, number one, it has a lot of volatility, but you don't pay for leverage. So what I mean by that is that if you go buy TQQQ, or you buy call options, or you any of those sorts of things, you pay something for leverage. Whenever you are taking on leverage, what is leverage? Leverage is borrowed money. Whenever you borrow money, there's cost to borrow money. But let's say that I'm really bullish on the indices. Like, let's say I think the NASDAQ's going to rip. Well, Tesla, it doesn't cost me anything additional to buy Tesla shares in the form of borrowing money, but the stock moves a lot more. You see what I'm saying? It's a way to tap into a leveraged type move without paying for leverage. So that's why I love trading Tesla. I've traded Tesla since 2020. I mean, the thing is very, very volatile. But yeah, it's not necessarily a buy and hold investment for me. It's been a trade for a long time. I've just traded in and out of the stock, and I've done really well with it over the years. S&P 500 is slightly in the red here today. U.S. stock market will open up in 1 hour from now. Unemployment claims today, nada, no. Those politicians are just, they're squabbling over how they're going to spend our money. They can't figure it out. I don't know what's going on up there. They could just give it all to me. That'd be fine. Just kidding, of course. They don't have any money. That's the problem. The U.S. government, this is a crazy concept. The U.S. government doesn't have any money. The U.S. government prints money, and the taxpayers pay for it. It's a weird concept, but that's the way it goes. Most developed nations actually run at deficits. It's a weird concept. They print money, like Japan is in massive debt, US in massive debt, UK in massive debt. Kind of interesting. VIX is up here this morning. We had a sharp rise in the VIX followed by a dramatic drop in the VIX. Yesterday was a red day for me. So what's your next steps on Tesla? Roberto, that's a good question. So Tesla, I'm not logged in to my brokerage, but if we essentially can't hold this area, if we start breaking through these lows, I'm probably just going to take profits on it. I've owned it since April. I mean, I traded the move higher here out of this consolidation. I'm still in the stock. I've held it for some time. We held support despite the choppiness here. We broke to new highs. Stock's been beautiful here this year, but I'd love to see this area hold. I would not really like to see Tesla reject the all-time highs and start breaking with momentum to the downside again. I'd prefer to just take profits and watch it again later. But yeah, I mean, Tesla earnings were not great. Their earnings missed, but their revenues were up. The bulls will like this. The bears will like this. Overall, was not a great earnings report. You kind of had hoped that they would beat on both sides if you're a bull. And if you were a bear, you'd hope they'd miss on both sides. So yeah, they're broke. They just make the money. It's a weird concept, isn't it? Hey, Cheryl, it's good to see you. I hope everybody's doing well this morning. Yeah, so yesterday we had NASDAQ down. I'm still in the NAS trade. I picked up also, for better or for worse, a Russell trade as well yesterday. So I'm long the Russell. I'm long the NASDAQ. And just going to manage risk here. Like if stocks are tired and they're going to roll over, then so be it. We take losses and we move on. But it is important, an important distinction to make is that, so I have, also, let me just double check that Chris Pulver has the link today. I think James is in here. Just double checking that Chris is good. I know he's usually, could be a minute or two late, but just making sure. So here's the thing, right? When it comes to Okay, cool. Thanks, James. Chris Pulver has the link. We're just waiting for his royal arrival. Oh, and there it is. He's arrived. The man, the myth, the legend. He's coming in just a second. Yeah, so we'll see. But international indices here today. German DAX, a little soft. You have the Nikkei, a little soft here this morning. UK stock market was up quite a bit yesterday. There's some surprisingly good CPI data out of the UK. Not sure if you guys saw that, but if you're watching the British pound sunk yesterday off of and is still sinking UK CPI. So if I go take a look really quick, I'm just going to look at some inflation data. Let's see if we have it in here. We should. Let's go to UK. Yeah. So here's what happened yesterday. For those of you guys who are currency traders, or if you trade the FTSE, I mean, I know some people, does anybody trade UK 100 or the FTSE? Does anybody trade this? I'm just curious. I feel like I don't see a lot of traders who trade the UK stock market, but it's actually performing quite well recently. We do have some UK traders. Okay, some UK stock market traders. So the UK stock market broke, is that an all-time high? Close to an all-time high here with some real decisive move. Interestingly, they had their CPI print come in at 3.8% year over year. This was a better than expected print. The market was expecting 4% year over year inflation. We got 3.8. So I got to say, UK stock market, it for now seems to be moving with some momentum. Let's see if we can break through these highs. Perhaps that's the next leg higher. I don't love it because I don't love the story for the Bank of England by any means. I'll go ahead and just go out on a limb and say that I think that the UK is in trouble. That's, you know, I think a lot of Western nations are in trouble, but the UK's got a challenge, man. You've got GDP growth that is pretty much not there. You have inflation, 3.8%. Even though it was a better than expected print, less than 4%, still it's 3.8%, right? Bank of England wants to cut rates, but it's difficult to cut rates when you have no growth and high inflation, because high inflation can get worse, right? If you cut rates too fast, you know, you don't want to extrapolate the inflation problem. But I think the path of least resistance is the Bank of England probably will cut rates, because again, this is going to get their attention. Their economy is hurting. So yeah, UK is not as bad as the USA. I would argue that the US is in a much better spot. It's my opinion. UK's got massive debt. So does the US. But you know what the difference is? If I lent money to two different people and one person makes a lot of money and the other person does not make very much money, who would I rather lend money to? Look, I'm not saying either of them are in great circumstances, but here's the US GDP growth at 3.8%. Here's the UK. It's pretty much nothing, right? GDP pretty stagnant. US. So if I was to lend money to somebody who has a fat paycheck versus somebody who's unemployed, who's more likely to pay me back, right? Now, granted, US is not, it's not perfect either. So understand. It's like somebody who has good income, but also spends all of their money on cigarettes. That's the US. Anyways, let's bring in Chris Pulver. He's ready. He liked that joke. So we'll bring him in, see what he has to say. What's going on to Chris here in just a second. Hold on. We'll get it switched over. Here he comes. All right. Hey, Chris, you're behind something, but we'll fix it in just a second.
All good. Morning, Nick.
We can hear you. Do you like my, it's like lending money to a guy who has a good income, but he spends all his money on cigarettes.
Very true. Yep. He lives next to Vegas, I guess.
Yes. He has a gambling problem.
Yep.
He
got that big old DraftKings account.
Yeah. He can't stop trading gold.
Yeah.
That's who we're lending money to. I just thought it was interesting. UK stock market pushing all-time highs. Chris, what are your thoughts on this week? We've got the VIX trying to push higher again today. What are you watching?
Well, here's what I'm really paying attention to. Interesting levels this morning. So we rolled over into negative gamma yesterday. Looks like today price above 67.05 is a positive gamma, which just means like steady melts up to the upside. We did come back and we filled Monday's gap. So that was actually a good technical spot to come back and tap. So above 67.05, interestingly, directionally, 67.75, which is a new all-time high. So if we get to 67.10, 67.15, I think the market's going to try to go after some fresh highs either today or tomorrow. The bigger picture, this is kind of the pattern I've been warning all week. You know, we have the big October 10th candle. If we break above that, measure the move. If we break below that, measure the move. We still haven't hit the 50-day moving average. So even if we do poke fresh highs, Nick, I have some concerns that it's going to stay. I think we might be dealing with a slightly higher high, and then we come back down, tap this 50-day, you know, get some more sideways shakeout. I think that's actually healthier if we actually do still pull back versus melting up higher. I certainly don't want to see Q4 end with a, you know, limp in market. I want to see either this thing go sideways and we break fresh highs with some momentum, or we have a bit of a correction that's underway now and we find a way to stabilize and, you know, get things back up where they need to be towards the highs or higher. Mag 7 earnings are next week. We're getting our first real round of news tomorrow, right? We have PMI numbers at 9:45, CPI numbers at 8:30. That's the first news we've had since ADP, which was, you know, 3 weeks ago or something. So,
Chris, I need him to figure it out, because I want to see, for my selfish reasons, I want to see the commitment of traders report.
yep.
I want to see the jobs report data. Like we are really
Just trading in the dark, man. No data.
Can they just figure out how they're going to spend our money recklessly and just get back to normal?
Yeah, it's coming through grifts.
Yeah, right. To your point, tomorrow we are getting some serious data here for the first time, guys, in quite a while. We've got the CPI report scheduled for tomorrow morning, 8:30 Eastern. We're going to get a CPI print, regardless of government shutdown or not. We also get some PMI data out of the U.S. And, of course, we also get some UK and European PMIs in general as well. So, honestly, will be nice to actually get some data going into the weekend and finally getting something on the table. What about, Chris, the gold move? We haven't talked since the craziness in gold prices.
Yep.
Did you do anything with that, or is this not enough of a pullback for you?
No, I did do something with it. It was all of the dollar cost averagings that I put in for pulver alerts.
Mm-hmm.
So I just got filled on, I think PHYS was the first fill. I still have CEF pending. Oops, CEF pending. And it's I think it was right at $37. And so we bottomed out around $37.20. So I've got 37, 35, 33, and 30 pending. And I'll wait. GLD, I mean, basically they're still at these moving averages. I didn't buy the 21 period on GLD. I think we still have a pullback. You know, at least there's some skin in the game. I have ratio spreads and naked puts on GLD and SLV. I have all the dollar cost averaging positions on GLD, SLV, CEF, PHYS. I've got trades out there pending, and I'm going to be patient to wait. I feel better that this pullback did happen, because if we just kept running, I think inevitably it was going to, you know, pull back. I wonder now if the first sign is we, you know, had this aggressive correction, we quickly rally right back to highs, and again, it's a noisy spot. I mean, I don't think a lot of traders realize, especially if you're fairly new to trading, that sideways is a direction. And we've had so much direction this year. We've had so much up in gold. We've had so much down and up in the U.S. markets. We had so much up across the world. Nick, do you know? I heard you mentioning some of the international stuff. Do you know the best performing ETF this year for a country?
Is it going to be? Hold on, I think I know this. Poland.
To
Spain?
my knowledge, it was Greece, and it was just overtaken by South Korea.
Interesting. I do know that,
like 70+% for the year.
Poland ETF.
It's got to be up. It's up there. Let me find out. I've got it right here. Poland is 60.5%, but we've got South Korea at 73.9, Vietnam 67.2, Greece 64.2, Peru 62, Spain 61. So Europe had a lot of love with the pigs. Portugal, Italy, Greece, Spain. I throw Poland in there at 60+%. Let's see here: Austria 50%, Italy 43%, Finland 39%, even China 36.4% for China. I mean, everyone's like, "Oh, USA." I mean, it's kind of how the world. It's like the USA in the Olympics. We think we're number one. We're 14.4%. We got. I mean, again, U.S. has outperformed a lot of countries for a lot of years, but this interesting like repatriation and rotation back into like non-U.S. This is why I had the exposure in SCHY. which has been clinging towards these all-time highs. I did take some profit on this. I'm looking to get back in if we have, pullbacks into my moving averages. But this is primarily a, Europe, India, Asia exposure, which I'm fine with.
We're looking at here, Chris. This is SPY versus FEZ, FEZ, the European stocks 50.
Okay.
Kind of interesting. For a long time, you have just had U.S. dominance, SPY over FEZ.
Yeah.
And then you can kind of see what you're talking about here, where you've got, take a look at a weekly chart, you've had a really a big shift. The big question now becomes, is that a multi-year theme, Chris, or is that just the tariff onset kind of weirdness? In fact, I still have to say, if you had told me that we're going to go through all this tariff stuff, I would not have guessed that European stocks would have such a sharp rebound.
Right.
Not just a rebound, but a massive shoot to the upside and dramatically outperform. But I guess, it does make sense in the idea that, look, if tariff uncertainty is making countries really uncertain about the US, it's got to go somewhere, right?
Mm-hmm.
And maybe the places that it goes are other trustworthy, to an extent, stock markets as well.
Yeah, I mean, I think it's Double Line Capital. Jeffrey Gunlock was talking about. He thinks that non-US is going to perform pretty well for the next 10 years. So I mean, exposure I think is important. I'm not going all in. I think that with the way that I trade options, especially without owning anything, and I use the leverage for income, I'm going to stick with a lot of liquid US based instruments. But having at least a basket exposure for international, I don't mind getting. Here's kind of my mix. I don't mind China, India, Brazil, Latin America, Eurozone. I mean, Eurozone's fine. Obviously, some of the ETFs are killing it. But I do think, they still have their problems. I mean, Eurozone is for the first time in a decade finally spending money fiscal policy wise. So I think it's a nice pop to the upside. But as we've talked about this before, I don't think that the world can just outperform without the US being stable. US has to be stable. US has to be at least solid, a solid foundation, or else nobody's going to go up.
And I talked about this a little bit yesterday, Chris. I'm glad you're here to hear me talk about it too now, because I think what I've got pulled up is GDP growth projections, and I've selected a couple countries. Here's the thing, right? India, you mentioned India and China. If I'm going off of an investing perspective, I like some secular themes that I like to invest in are places that are tech friendly, but also places that have population growth and GDP growth. To me, that makes sense. That is a very simple metric of like, okay, places that are growing in population, people are immigrating there, people are, a business friendly environment. Longer term, I actually like the Southeast Asia more than I do Europe. Just look at, for example, here's India in blue. India has some of the most impressive projected growth internationally outside of the US. And to me, that's exciting. And then I look at China. China also has projected growth. It's been a dog for multiple years. We had like the big blow off top. What was it, like 2015 or 2014? There was a huge, correction in Chinese stocks that is still yet to fill. But again, if you're talking about international, for me personally, Europe does not get me incredibly excited. I don't hate everything about, investing in Europe, but lower growth, population decline over the longer term. And then, overall, I'm just seeing more. I'm with you in terms of, if I'm picking a couple places, India, US, China, that's kind of a couple, maybe a little Brazil in there, because I like the commodities world as well.
That's the only, and that's primarily the reason. Latin America, Brazil, because of commodities, which I think do get a pretty decent rotation. One thing that I think is a little disconcerting this year is utilities is our best performing sector. I mean, so we're not really leading the charge with the typical bull market sectors that are just flush with capital. I mean, I actually just drafted my my prezo yesterday for you guys with our November 17th session.
Yep.
And just a little sneak peek is, I think that the CapEx spending we're seeing in the US has to be frothy. it has to stay frothy. It has to stay super optimistic.
Yes.
If our AI narrative breaks, I do think that we're on some thin ice, at least for some choppier, more volatile markets.
I would say, Chris, that the biggest risk to the stock market, I heard this on CNBC by a guy that I like. I like listening to Josh Brown, if you're familiar.
Okay.
But anyways, he made a really important point that I think is so simple, but it goes right in line with what you're saying. The biggest risk to the stock market going down is the stock market going down. Because what I mean by that, and what he meant by that, is that all that CapEx is propagated on the idea that stocks are going up, things are going well.
Right.
If anything cracks in the invincibility story, then the biggest risk is the wealth effect goes away. The consumer, the high-end consumer feels good because the stock market's up.
Right.
And CEOs feel good about spending because their stocks are getting rewarded.
Right.
So again, totally with you on that. The biggest risk to the stock market going down is the stock market going down.
Yeah, it's true. I mean, I'd say whether it feels like it's a free market or not, or it's manipulated. We have a president that's trying to basically backstop every bad news story. We have a Fed that is switching gears to being way more dovish and accommodative. Whether it's the right thing or not, I think that there is a buffer where the Fed needs to come down in policy, especially with the labor market. Like we've talked about before, energy prices haven't gone ballistic. In fact, interesting segment I listened to this week. Somebody's forecasting, macro wise, like oil is going to be sub 50. And then by the time it's sub 50, maybe sub 40, by the time it's sub 40, load the truck and get long oil, because at, sub 40, it's like, why not go all in on oil? Because it's unsustainable, right? You have oil too low, the world's going to go to war. You have oil too high, everyone's hating the prices, but you can be profitable. So I do think that it's going to be volatile. I don't know if we're going to ever have a 2020, oil prices and oil futures at $- again. But it was a great time to buy. So this year, I mean, we had a pretty strong bounce on oil just the last couple of days. That pretty strong bounce off the lows at 55. So my oil futures trade looking a lot better. Bouncing here at 56. I had an oil futures trade on for Pulver Alerts that as long as we stay above 50, that should be about $220 by the end of the year. I think that stays. I think we're still kind of stuck, lower highs, pretty solid support now around $55, $56. What drives oil prices through this floor? Somehow we have to have like a crash in demand. I don't know how. If again, this is the CapEx spending, this is the energy. The supply side is unmatched. It's like insatiable demand for a very finite supply. We don't have the supply to meet all the energy needs right now. And we haven't seen this stuff. We haven't seen anything bad happen with this whole AI rollout, this whole data center build out, everything, utilities, everything. All we've seen is electricity prices going up for households. And we have seen ridiculous amounts of demand that is at some point right now, we don't have the computing power to match it. To meet that demand. So when we start seeing rolling blackouts, or we see power outages, or we see problems with the grid, that's a problem. But we haven't seen it yet.
Yeah, and it's I mean, that is the game that I'm playing, at least always really, is momentum begets momentum. And when it comes to oil, I really like the idea of, if we can break this downtrend, oil to the upside makes a lot of sense to me, especially if you do think like at some point the market rolls over big time. Like if you want to see a sustained down move, it's a good chance that it would coincide with higher oil prices to flare up the inflation risk. I mean, I think inflation risk is one of the bigger potential catalysts for a market sell-off. But again, we've had a good overall trend in inflation. Oil prices have remained muted. Nice little push here happening today. I would love to see, in terms of a bullish setup, Edgefinder's got a bullish rating on it, citing overall score +7, sentiment data, a little bit of contrarianism there, which I like. Technicals starting to look good here from a potential breakout perspective, and economic data, growth metrics have been pretty good. I mean, we're talking about GDP growth projected. I saw 3.9% projected GDP growth for the U.S. from the Atlanta GDP Now for the next quarter. I mean, for third quarter, that's pretty strong GDP growth. So to me, will this thing all end up in a melt up? Maybe, but I don't think we've seen a true euphoria melt up just yet. And so is there a potential where, oil prices continue to rip? Do we see everything kind of melt up at some point here? I mean, I think oil prices, you've got a long-term level of support around the 56 level. And I'm with you. I mean, I think for you to see demand destruction, you've got to see like really bad jobs numbers, GDP number completely fall apart, trade war dynamics flare up again. There is, there's a lot of room here, I think, for price to expand higher. So I like that setup. I'm going to be looking for technical breakouts on oil as well.
And also, I mean, with the inflation data this week, I know all we're going off of is the most of the economic calendars. I was looking at this. I'm curious if Trueflation is getting their numbers, because they don't measure just like, the core and super core. We haven't really seen a huge jump up in inflation. So, the headline CPI forecasted is 3.1. The previous was 2.9. That's what we're expected to see tomorrow morning at 8:30. Because oil prices have been lower and we just recently hit those lows, and there tends to be a little lag in the government data, I do wonder if we're going to see a better print than 3.1. So forecasted for 3.1, do we see like a 2.9 and it's the same as previous? Does the market take that in a positive way? Obviously CPI has gone up from lows of 2.3 up to 2.9, and we're still sitting here just within like 1% or so from all-time highs. So it obviously isn't that big of a deal unless we see, oil, I'd say, spike back to, high 70s, $80+. Then it's going to start to matter, because pay at the pump. And I mean, U.S. consumers primarily, it's pay at the pump and grocery prices. That's where people see it and feel it every day.
Yeah, I love, they always, I find it kind of comical that they strip out and they do the core CPI. It's like the things
that's
that
where you feel it. Let's just not
matter
talk about
to
it.
people. Yeah, let's not look at the ones that matter to people. Like
it's mostly, and it's like 40% of our CPI numbers are shelter, which is always lagging.
Right.
So
anyway. So here's another thing to think about, just to add on to the inflation conversation as we prep for CPI. Also, really quick, if you're enjoying the show, make sure to hit the thumbs up button, subscribe, do all the YouTube things for me. I forgot to mention that earlier, but you can also subscribe to Chris Pulver if you want to check out his YouTube channel. Before we wrap things up, I do also want to talk a little bit about what we did at least see from other parts of the world. We saw a lower than expected print in the UK. Could that be coming to the US as well with your thought process there, Chris? Maybe. We'll see. They expected 4% CPI year over year. They got 3.8%. However, we had Canada. Canada did have a slightly higher than expected print. So we'll see what happens for US CPI. Like I said, we are going to be getting it tomorrow, but will be really interesting just to see if we follow suit with the UK.
We have PMIs on there, Nick. Edge Finder with PMIs.
PMIs, yep. Which one? Services or manufacturing?
I mean, both, but I mean, we're primarily services. I'm just saying, staying above 50 is good. I'm going to see like the histogram to see what our trend has been. Manufacturing and services. Yep.
So here is U.S. services PMI. You can see we had a bit of a miss last time around, but October 3rd is last time we got some data here. So we'll see what happens this time around. But yeah, to your point, services PMI, kind of you can see a gradual decline here, sort of hovering right at that 50 mark. For the bulls, you'd probably want to see, for dollar or stock market strength, you'd probably want to see a little bit of a tick up here rather than to go into contraction territory. Contrasted with manufacturing, which has been in contraction territory for most of the last few years.
Right. But going from, 48, 48.7, 49.1, if we start to push it up into the 50s, that would be a good sign, at least for, non-contractionary phase. Like above 50 is good.
Yes. Yeah. Okay. So it should be interesting to see. And again, GDP growth, US looks good. That's the thing, Chris, where I'm like, I can't fully get behind a bear case as long as the growth metrics look decent. And, if we just want to go rapid fire real quick, just look at some high level US economic growth data, GDP growth, just off what we just said, right? GDP growth surprised to the upside, manufacturing surprised to the upside, services missed, retail sales strong. So, you still have growth in the economy for now, but the other thing to worry about here is that a lot of this data is starting to get old and we haven't gotten the government shutdown resolved.
Yeah. Well, I don't think there's a priority for that, honestly.
Yeah. Maybe they don't want us to see what they've got hidden behind the curtain, Chris. Maybe they
I think it's just forcing, I don't know, it's forcing everyone to have to deal with the fact that it's so divided and nobody's going to agree on anything. They're not even talking. I mean, I don't know. For Trump, I heard something that Trump's like, I'm not going to talk to Democrats until the government reopens. And like, don't you have to talk together to
Yeah,
reopen the
that's all right.
government? Like it's
Yeah,
kind of
gotta
working both
talk.
ways. So I have no idea what's in store for how long the shutdown lasts. The market doesn't really care that much, but eventually the data is going to sprinkle in. I mean, with CPI this week, that's encouraging that we have some news coming in. I'm curious when the next non-farm payroll is and what it actually looks like. It also, I mean, I would question the integrity of those numbers coming out, just because it's like, are you just throwing it out there to appease people that are waiting for a news report or a newsprint? Does it actually reflect like real employment? Anyway, I think right now it's like, I think the market's trying to hang in there. That's what it feels like, as we're just kind of hanging at these levels. I was looking at SMH because I want to kind of dollar cost average into SMH. I'll talk about this more with our November 17th on some of the plays I have for 2026.
Yeah.
But just, hanging in there. We're up, 13, 14, 15% for the year. NASDAQ's in the high teens, but, we are sitting up near all-time highs. Sideways is a direction. Path of least resistance is probably still bullish. I mean, for me to really change my tune on, oh my gosh, Nick, I think we're going to go bearish. It's like we have to break below like 6,200 for me to question this market at this time. As far as like, I think I'm going to be way more protective. But a lot of my positions that I've been cautiously bullish on, the threat level for me is like 58, 57, 55, even all the way down to April lows. So in the pull rollers, for example, when we had the flare up in the VIX to 24 and 29, I was selling premium out below the April lows for like $550 in total credit. So it's at least some income that I've been generating. The VIX is elevated, like you said earlier, going from 29 all the way down to 17. It's like, that's a ridiculous move. And by the way, I'm guessing that you closed out your November VIX. Yes,
I did.
Okay.
I did.
So
Okay.
did I.
Closed out.
I was just under 100% gain on that. I did a synthetic play, but 24, 25 VIX. I think I got in for like a 281 debit, closed it for like 550 or so.
Nice.
So it was a good play. I mean, timed it well, considering we had a huge vol crush. So now my next VIX play is out to April of 2026. I think that's a good enough window to see, maybe the VIX flares back up to 29. What's interesting, it gets really interesting if we get above 30. If we get a VIX above 30, that little April play can pay pretty well. I think I'm in for like a $400 debit. And above 30 is like a $2,000 or $3,000 profit. So we'll see. We'll see what happens.
Yeah, and Chris mentioned it a second ago, but everybody who's here with us live, I don't want you to miss this. It's completely free to join, but we are doing a webinar event for 2026. Chris mentioned talking about some of the themes. We do this every year. We have a lot of fun doing it, where we essentially talk about ideas, themes, setups for the year ahead. If you have tuned in for any amount of time, then Chris and I, we're not necessarily like super short-term day traders, scalper. I know Chris does some more short-term stuff, but we do always pay attention to cycles. We pay attention to the big picture, secular themes, cycles, trends, all that stuff. And we do this yearly because it's a good refresher to kind of lay out the game plan for the year ahead, given all the stuff that we've seen this year. It is completely free to register. There's no payment required. You literally just fill this form out and we will send you some updates from our marketing team about that event so that you can join us and get prepped with us for 2026. I know it sounds early, but you get into the holidays and things go real quiet. So having a little bit of time to plan ahead of the new year when we kick things off is really nice. So we'll be doing that in mid-November. So register there and emails will be sent to you on how you can join for free and ask your questions and get involved with us there. It won't be public on YouTube. It's a more private event so that we can answer questions a little bit more intimately and help traders out who are also interested in hearing our game plan. It's also good for us. I mean, Chris and I don't know, Chris, I enjoy doing that. I enjoy kind of like mapping out in a more presentation style, like what I'm planning for the year ahead. So
I think it's important. And it also keeps me objective when it's like, look, let's take a step back from all the current positions that I've got going. Let's look at the markets as is and start to develop some, I'm looking at it as what can I do for the rest of the year to kind of finish the year strong. And also, what am I going to do to position on 2026? Am I bullish, bearish? Am I cautious? It's pretty easy to see, like, I'm cautious. I'm cautiously bullish. But I've been saying that for years, and it's served me well. It's just, 2026 is going to be an interesting start to the year, and certainly with midterms, we've had a lot of big sentiment swings, not just politically, but also market-wise. I mean, I think that's why the pain trade has been so steady. The upside is because everyone is worried about the recession. Everyone is worried about our debt bubble. Everyone is worried about, but the market isn't until it is. So ultimately price matters.
Well, there you go. Guys, we're going to wrap up our segment of the stream, but don't go anywhere. We've got our next show host. Of course, it is Miko Audu going over some technical setups, highly technical traders. So a little bit of change in pace, which I think will be nice for some of the more chart-friendly traders in the audience. So Chris, thanks very much for joining me today, man. And we will see you back next time.
All right. Thanks, Nick. See you, everybody.
See you guys. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
All right, guys. What is up? Hope everyone's doing good. Looks like, okay, there we go. What is up? Hope everyone is doing well. Glad to be back. As always, I'll go through some markets I'm looking to trade. Any trades I'm currently in, I'll share with you guys. And any markets you got your eye on and want my opinion, let me know. I can definitely share that with you guys. But my focus at the moment is a lot with the yen. The yen looks incredibly weak, and I'm looking to see if I can take advantage of that as much as possible while it lasts. So I do want to start with the yen basket, but I do have a long position on pound yen, which I entered early in the week, and I'm looking to see if I can find some additional entries. So what's up, Jaylene? Hope you're good. The Chicken Whisperer, what's up? Yes, we can take a look at the Dow Jones as well, no problem. But yeah, looking at the yen, this is the yen basket, so it's the yen against other major currencies like Aussie, CAD, pound, etc. You can see we've been in a very notorious downtrend, and it looks to me as if this trend is set to continue. The market's looking incredibly bearish on the week. It has looked very bearish for the past few weeks, and we've had a really nice pullback to retest some structure, a lovely wick. I think that was last week Friday, and it looks like momentum has picked back up again. So probability wise, looks like we've got a good chance of coming back to test that low. And just because we know the theme of the market, I would expect to see lower prices beyond that. Of course, there'll be pullbacks, there might be periods of consolidation, but as long as nothing changes drastically with the yen, like something like crazy like that, as long as we maintain highs, I'm looking to keep shorting this one. So I do have a long position of pound yen, basically looking to take advantage of the yen itself. When I do trade the yen pairs, I'm not really trying to trade the currencies partnered with, it's more so the yen, and I look to see which currency pair is providing the best technical setup. And at the time, pound yen was ticking all my boxes. So we had a really nice break and retest of the high here. Lovely momentum. I think this was a couple of weeks ago. We had that big gap. I was a bit cautious because there was always that possibility that price could pull back, fill the gap before continuing. But we had a really corrective pullback. Things were looking really, really tired, and a really nice retest of the high. So I was confident enough to get into the trade, and it only looks like momentum is starting to pick up now. I did enter this on early hours of Monday, and now we're starting to see some consistency, some higher highs and high lows intraday. So I'm liking what I'm seeing with pound yen. And again, targets initially there, but I am looking to see if I can push it to the weekly high, which is back all the way up here. If this long-term uptrend is set to continue, I don't see much stopping us getting back to that high. So I'm going to try and be a bit more aggressive with this position. Normally, I'm just out at the next swing high relative to the time frame I'm in. But because there is good probability that price can continue, I'm trying to stretch trade further. Equally, I'm seeing if I can find some intraday opportunities to find some additional trades to this one. We're starting to create some higher highs, which is great. I want to see us preferably have a bit more momentum. Then I'll be looking to see if I can catch some retests of prior highs, and again looking to keep buying that to the upside. So I'm liking what I'm seeing with pound yen. Other yen pairs look of that nature as well. Take a quick look at the Dow Jones, and of course any other recommendations, drop it in the chat and we can definitely discuss. Dow Jones, so overall still very bullish as well. Now, I'm not the biggest fan of how we have rejected the high now. So I would still predominantly be looking for longs, but it's never a good sign to see price fail at highs. A healthy trend is always a trend that's creating new highs, not failing at highs. So that is a slight kind of, not necessarily worry, but a bit of caution. Maybe price could have a deeper pullback than if we did create new highs. So I said coming into the week for US 30 that if price does take up the high here, I preferably would be looking at deep pullbacks to try and take it back to highs. Now, price was very, very bullish. We not only took out this high, but we took out that high as well. But because we're failing here, I would wait for a deep correction, preferably back down at support here. That's the level, that's the zone I would feel the most comfortable buying, because I know at least I'm not close to resistance. I'm back where the buyers are. And if price was to break through that, then of course we're probably having a much bigger correction than I first anticipated. So I quite like the swing idea of some longs here. There could be some intraday shorts to take advantage of that momentum, but again, I wouldn't really entertain the shorts, to be honest, unless you're going to be very in and out. So yeah, US 30 still very bullish on. Yes, we're failing at highs, so because of that, I would wait for a deeper correction. We've got some really nice support around 45.8, 45.6, and as long as we stay above this support level, I would still keep that bullish bias. But yeah, a bit more caution now. I think the Nasdaq did the same thing. Yeah, failed at highs as well. So again, Nasdaq failing at highs. I like support down here. I do think this is an interesting place. Let's see how price reacts first. I think that's a smart place to position long. If we break through that, then yeah, I'll definitely step away from that long bias for now. Perhaps we could see a bigger correction on the indices. Pound USD, we can discuss that, sure thing. Do I have an eye on oil? I do. I am pretty bearish in oil, but this change momentum is interesting. I'm still bearish, so I'm going to gauge it, but I'll go into a bit more detail. Let me just take a look at pound USD. So pound USD, I'm not really interested in USD pairs, to be frank. I was interested past couple of weeks, but to be honest, USD for me is kind of just a little bit of a mess. USD is not really sure what it wants to do. Is it going to pick up strength? I mean, it has been picking up strength, but is this strength to continue, or is this strength for a bit of a pullback for us to continue being bearish? I'm looking at the higher time frames for pound USD. It is relatively flat, so instinctively, this is not really a market I want to trade. The yen pairs, they look like they're having a bit more fun, so that's kind of where my focus is right now. But pound USD, in fairness, we do have some structure which the market is showing some consistency with. We've had a pullback into this zone, respected it pretty well early this week / late last week, and we've been on a steady decline. Looks like we're heading back to support. Do I see any opportunities there? No, not really. I don't really want to be selling this far down. I want to be selling up here. So what would potentially interest me is if price was to rally back to resistance, and then we can look for some type of double top at the highs here. I'd feel a lot more comfortable shorting up there, especially if I get some stops above that zone. And of course, my risk reward will improve too. So I would much rather wait for price to be back at resistance if I'm looking for a short. And from a long bias, I would probably look to play longs until we get to this zone here, because price is breaking through lows here, so that's not a good sign for the buyers. But this has been sturdy support and gave us a push to these highs, and of course another one there as well. So that's where I'd feel most comfortable for longs. Altogether, to be honest, pound USD is not really my focus. Not a lot of, I'm not really focused on the USD pairs, but I would have a bearish bias, and if I had to trade it, I would be looking at some shorts around 1.345. In terms of oil, so oil's been really interesting. I generally thought oil was just going to create new lows this week or last week. I was looking at price to take out this low here. I still do think we can do that, but with this change of momentum and change of pace, I have to be careful with how I gauge it. Because again, if I zoom out, look at the bigger picture, in fact, if I go to the weekly chart, you can see how consistent oil's been. I mean, pretty much since the high in March 2022, the market's been so consistent with all these swing highs. So, I've predominantly been bearish. And in a bearish market, I'm always expecting price to at least meet the low, but preferably create a new low, and vice versa in a bullish market. So the fact that we came so close to doing that still interests me, because I would still expect price to go and do that unless we break through this zone here, and that would be, you know, price breaking structure. The whole point of a bearish trend is that we maintain lower highs. If you start breaking through them, question marks are going to be raised. So I don't want to see price take out this high. As long as we can stay below that, I will have a bearish bias for oil. However, because this is so aggressive, I do want to see some really strong rejection. So if I drop to the 4-hour chart, because now we're coming back to a pretty big level, which is this support level here. So for me, it's an interesting place for a short, but because of the momentum we had coming into this zone, I need to see the bears really come into play and really show some strength to indicate that, okay, despite that momentum, you know, we're still likely to sell off, we're still likely to follow that trend. If we break above this, yeah, I'll start to pause that bias even more. So yeah, oil, I'm still looking at shorts. I want to see 62 hold. Really, really important that we see some strength in that rejection. And if it does break, I'll be a lot more cautious with the shorts there. We'll go take a look at euro dollar, then I'll take a look at gold as well. Yeah, we can take a look at dollar CAD. A lot of people focusing on dollar pairs here, and I just said I'm not liking the dollar pairs. I mean, again, I'll tell you why I'm not liking the dollar pairs, to be honest. So one of the reasons why I'm not liking the dollar pairs, because there's a bit of contradiction at the moment. We've got higher time frames. If I zoom out, look at the daily chart, I'm looking at a relatively bullish market. However, the past 2, 3, 4 weeks, we've been pretty bearish, and the market has been falling, lower lows and lower highs. So it's a bit of a gauge right now with euro. Is this bearish trend set to continue, or is this just a counter trend before we do continue bullish? For me, it's difficult to tell right now. And because I don't have an overwhelming bias on a particular direction, it's always going to be difficult for me to take any trades. So regarding Euro USD, when it is this sort of situation when I do have conflicting direction between time frames, if I'm going to trade it, which I rarely do, but if I'm going to trade it, I would try and keep it short term. I don't want to hold that position too long, because I don't know where I'm going with that position. There might be a nice opportunity intraday, maybe even intra-week, off a nice level, but that's about it. I'm not looking to try and swing that. So for Euro USD's case, we came back into this structure here. We formed another lower high. You can see the consistency. So it's been a pretty nice bearish, you know, couple of weeks, 3 weeks for euro. But as we come back into support where buyers could be sitting, do I feel confident that price can break this? No, not really. So if I was short here for euro, great. I'll just trail stops and see what happens. But I wouldn't want to be entering shorts here with the anticipation that price will continue lower, because I don't have much confidence in that. And especially where we're situated, I don't want to be attacking shorts. And from a bullish bias as well, would I want to be jumping into some buys knowing that we do have this trend here? No, not necessarily. I'd like to see us start to break through highs again. That'll show me, okay, the buyers are back in control. And I wouldn't mind some lower time frame pullbacks back to the high. This would be an opportunity I would be quite keen to trade in a situation where I can't really work out the longer term play. This uptrend still looks like it's in play, but it looks really tired. So I do have contradicting technical factors here, which is what's keeping me away trading USD pairs. Can get my words up there. In terms of gold, however, gold I do like, because of course gold, there's clear direction of gold. So in fact, I'm just waiting for momentum to pick up with gold, and then I'm looking for pullbacks. And again, we've had a bit of a drop for gold. I say a bit of a drop, it's actually a huge drop for gold. But to be honest, nothing's really changed for me, because the way I trade, I always focus on like higher highs and higher lows. As long as the market maintains structure, I'm always going to look to try and continue that trend as long as it's healthy. And yes, gold's had a pretty big drop there, but it's a matter of time. Price is always going to have a bit of a drop here. We're not going to just shoot forever. There's going to be a correction at some point in time, and it looks like we've reached that point in time. So I like this zone price is respected. Nice wick into that zone there. If momentum can start to pick up intraday, I will start looking for buys again for gold. And what I was saying on my stream earlier today is if price can rip through the highs here, well, I do think pullbacks and break and retest opportunity flag patterns is really what my focus will be, and just see how far I can take it. Because this bearish move, it's either going to be a huge opportunity for longs, or it's going to set a longer term pullback. For example, if you look at the last time we had a meaningful drop for gold, it was back over here, and you can see what happened. Well, it provided a great opportunity for some more additional longs. Of course, we did consolidate for a while, but eventually price did continue. And you can argue the same situation here as well, and even over there too. So most likely this bearish move is just an opportunity to start getting long again. So as soon as I see momentum pick up intraday and I start to see some higher highs and higher lows and some consistency within that, then yeah, I'm just looking for pullbacks intraday, and hopefully I can take it back to highs and probably further as well. Dollar CAD, I was trading dollar CAD earlier this week. Dollar CAD earlier this week actually was a USD pair which I did like, because there was a lot of momentum with USD CAD. We had a lot of momentum on the way up here. So I was just looking to see if I can find an intraday buy to take it back to resistance up here. I found this trade on Monday morning. It was going well, but dollar CAD decided it wanted to ruin the party, and about 75% of the way to my target, it decides to roll back over. So I did take a loss in this position. Looking back, it was a healthy trade. It just, we had some CAD, I think we had some CAD news come out, and CAD, and oil started to gain some strength as well. And CAD just became very, very strong and just didn't quite have enough juice to go and test my target. So unfortunately, to take a loss in that position. But now that we have headed lower and we've taken out some more lows, I'm not keen to be buying dollar CAD again. The reason why I like the buys at the start of the week is because we had this bullish trend in full swing. Now we've kind of not necessarily ended the trend or reversed, but you can see there is a big change within this structure compared to what we were doing previously. So the trend isn't as healthy as it once was, and I wouldn't be as confident to bet on the continuation of this trend. So because of that, I would be a lot more cautious about looking at dollar CAD opportunities for a long. And actually, I think intraday shorts actually look pretty good, because we've got some structures starting to print now, and we've got some momentum as well. Really strong move there, really strong move there. I would argue intraday we could probably see another move back down. So dollar CAD has gone from very bullish at the start of the week to actually looking somewhat bearish, and I would favor at least an intraday move back to these lows here. In terms of the bigger move for dollar CAD, I'm not too sure about that one. I'm going to wait to see what we can do with a bigger pullback. We have been seeing some upside for the past few weeks. Is this going to continue? Well, I'll gauge the pullbacks and how we're looking. But it looks like this uptrend's kind of run out of juice, so I'll be a bit careful after dollar CAD. In terms of, we'll take a look at Euro Pound and Euro CAD. Yeah, Euro Pound looks horrendous to me, I'm not going to lie. Very, very choppy price action. I'm not looking to do anything with Euro Pound. Very rarely do I trade Euro Pound, because I'm always looking for direction. I'm always looking for momentum. And yes, there will be times where Euro Pound does trend from here, from time to time. But there's normally always a better market, I'm not going to lie, to trade than Euro Pound. But yeah, for this one, we're kind of struggling at highs. This could be a time where we start to reverse. I'm looking at the bigger structure. We've got a high there. Potentially could be getting ready for another one. Would I try and bet on that? No, not necessarily. So Euro Pound, I would just give this a miss. If this uptrend is still set to continue, great. What I want to see is more momentum come into the market. And obviously, I don't want to see us still failing to break through highs. If the market is still going to be back and forth at resistance here, that's a bit of a red flag for me. If I can see some momentum clearing resistance, well, that's a great sign. That shows momentum is back, trend is relatively healthy again, and I'll be happy to try and bet the continuation, provided we get some healthy pullbacks as well. But yeah, Euro Pound, I wouldn't really look to touch this one. Yeah. Really, really noisy there. Really noisy. And I don't see any really good places for a stop loss either. So I would be patient there with Euro Pound. If we do break high as well, sure, you can bet on the continuation of that. Otherwise, I'll leave it alone. We'll take a look at EuroCAD, and I'll take a look at silver as well. So with EuroCAD I don't mind. This has been a pretty consistent uptrend. There are some signs that it's probably coming to, not necessarily end, but it's starting to tire. But again, I always want price to break structure, and that would be my confirmation that, okay, maybe this trend is going to take a bit of a breather. So far, it hasn't done that yet, so I still do retain that bullish bias. And this, for me, is the zone where buys make sense. So in terms of an opportunity for an entry, I'd wait for some strength coming in on the 4-hour candle. So like a strong close, something like this to really show to me that, okay, the bears have had their fun, they're starting to tire, maybe they're taking their profits, and then the buyers are back into the market. And that could be a nice entry in itself. You don't necessarily have to bet on a push all the way back to highs, but probability-wise, price coming back to this zone is pretty high, and should we break through that, then yeah, maybe trading stops back to the high can make a lot more sense as well. If, of course, we do keep falling and we do take this low, then I would pause on that bullish bias. Break of structure is not a good sign for continuation. So now definitely make me pause. Definitely make me pause on EuroCAD. But for now, we're still obeying structure. So the key thing is just waiting for that momentum to get in, and then looking for the continuation. In terms of silver, so silver's an interesting one. I prefer gold because gold looks like it's kind of consolidating better, and I don't think, especially with silver as well, silver, we do have some structure above our heads, which I am a bit worried about. So I don't really want to be buying into that. But for both silver and gold, the key thing I'm waiting for is momentum, because when I'm looking to gauge direction with both of them, I am just dropping to the higher time frames and looking at what we're doing. And the market is still so bullish. I probably would be cautious with silver when we get back here. But if I can see some intraday momentum pick back in, so let's say if we can get some strength that can break us through this zone here, I would fancy some longs. And then let's say if we get back to 51, 52, then I'll be a bit more cautious. If I can see momentum break us through that zone, well, at that point, I would expect us just to get back to highs. So more pullbacks, more buying opportunities for both silver and gold. But I do like gold's price action a bit more, so I'm going to focus on gold a bit more in terms of entries. But both, to me, long term still very bullish. From a short perspective, very careful around 51, 52. If we are going to go further lower, that's kind of where I would expect us to make that move. But for the most part, I'm still looking at buys. Okay, so we'll go through some more yen pairs, because that is really where my focus is. We could take a look at Euro Aussie as well quickly. But with the yen pairs, there's still so much more momentum and room for them to move into. So I think there's a lot of opportunity there. In terms of Euro Aussie's been quite flat. I like this one. I do think eventually we can push back to the high. But until we kind of make a move outside this range, I am not looking to trade it. I do think the market is really flat right now, especially with that rejection last Friday. Yeah, last Friday I think it was. So I am not looking for opportunities until these highs can be taken. So if price can break outside of that, then I would bet on the continuation back to this level. Or if price can make a move back to support, and then from there we can see some upside as well as price retests the low of the range. And if price does break through this level, then I would put that bias on hold. At that point, there's a good chance we move back to that low there. But again, looking at the bigger picture for Euro Aussie, it's a pretty confident uptrend. It's just we're having a bit of a consolidation at the moment here. So don't want to really get sucked into the middle of that. Yes, we do have that overall bigger trend at play, but I want to be smart with how I play that. I don't want to be buying directly into noise. And if I get into any situation here, that's probably what I'll end up in. So yeah, focus more so on the high here, if you can get a break of that or a retest of that level. But yeah, in terms of the yen pairs, as I spoke about pound yen, I really like this one. Euro yen, its partner in crime, looking really good as well. Probably slightly better than pound yen, to be honest. Just because this one has already taken out major highs. Yeah, we've broken through highs there. So this is a pretty convincing uptrend. And it looks like we've broken through some more resistance on the 4-hour chart as well. So I don't see much stopping Euro yen to get back to that high. So especially if you're looking for intraday opportunities, especially if you like trend following opportunities, pullback opportunities, I think Euro yen is a really smart market to focus on. Conditions are very, very good. Momentum's looking like it's picking up well. Should we come back to retest support and hold well, I think that's a clever place for a long, especially if you get a stop loss underneath. Probability wise, a move back to 177.8, which is roughly where we got the high, I think is looking pretty high. And if you have a quick look at some other yen pairs at the moment, I know Swiss yen has been flying to the upside, but I think Swiss is probably the strongest currency for quite a while now, actually. So yeah, CHF has been pushing really well. To be fair, Aussie yen and New Zealand have been lagging a little bit, and that's because Aussie and NZD have been a bit more on the weak side of things, but they're starting to pick up some momentum. And dollar yen as well, that's picking up momentum. Definitely helped with some USD strength the past few days. So to me, again, looks like dollar yen set to make a push back to resistance there. Again, intraday, I think there's some clever opportunities if you can find some pullbacks. I like this range, back and forth, eventually a really smart breakout. If price could be kind enough to come back, retest that, I think that's a smart place for a buy. And you got a very logical target back to the swing high on the higher time frames, and we could probably go further as well. So looking at what the yen is doing, the weakness there, if that trend can continue, most likely you'll see all these yen crosses push up. Of course, some will outperform others, depending on the currency the yen is partnered with, but predominantly these yen pairs do move together. And for me, it's just about picking the better one and trading that one. So currently I'm in pound yen, so I'll just focus my efforts there because I don't want to be trading all the yen pairs that probably all do the same thing. So the plan now is just looking to see if I can scale and add more entries, especially on the lower time frames. I entered this on the 4-hour chart. I'll be looking to see if I can drop a bit more intraday to refine some more entries and see if I can get it at least back to this high here. But from a bigger picture perspective, back to this high at 207.9. So that is very much the plan I have for pound yen, and the focus for now will be attacking the yen pairs. CHF pairs also look good for shorts, but I quite like what I'm seeing on the yen. I think there's a bit more momentum there. But guys, looks like we have come to the end of my segment. I do appreciate you guys tuning in, and of course the opportunity to be on the stream, so I do really appreciate that. Thank you for having me. I hope you have enjoyed the segment, and I should be back next week for some more. So appreciate it, guys. Catch you all in the next one.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey guys, how's everyone doing? Happy Thursday. Hope you're all well. Hope you're all having a great week. So I did a bit of repositioning in my portfolio today, which I'll run through with you in a second. Just give me a moment. Okay. So I closed out the S&P. I was in quite a few long positions on this one over the past 2 weeks or so. So I bought down here. Actually, that's not true. I bought roughly around this area. I can't remember exactly where it was. Stopped out, I think it may have been last Friday or the Friday before when we had the US and China situation. We saw this little drop off. So my trailing stop got hit, decided to re-enter right here. And I was essentially just buying all of this. I ended up with about 6 different positions, all scaled in. However, after multiple rejections here, we've got US data tomorrow. I think we've got inflation coming out tomorrow for the US, as well as obviously the lack of data due to the government shutdown. And the fact that we are quite stretched, multiple wicks to the upside. I decided, you know what? I'll take the profits. I'll get out. Maybe I can get back in at another point. But for now, I'll just call it a day. How's everyone doing? Jaylene, hello. Ball out. Sluggy. Dragon, hope you're all good. So the other one is silver. I decided to buy some silver. So I've got a couple of different things going on with gold and silver. So yesterday, obviously, this week we've discussed quite a lot about the 9 weekly candles. So again, I'm not going to go over all that because we've mentioned it so many times at this point. But just to sort of briefly explain why I'm now long on silver. It's because I have a feeling that we might be out of this gold bear run, if you will, or the profit-taking run. So about 40% of this move was made up by purely just profit-taking. We've not seen a structural shift in gold. There has not been any fundamental change behind gold's run. So as I've said this many times, I'm not a bear on gold. I'm not sat here thinking gold's going to go to 3,000, 2,500, etc. But I was anticipating this again due to the data that we've got on the 9 weekly candle. However, on all of the data that we've had, every time this has arisen, the market drops on an average between -8 to -13%. We had almost a 9% drop. So that's kind of the baseline. That's the what do you want to call it? Like the lower band of what we could be expecting. Now, given the fact that we have seen gold continue to get a buy or get a bid, and this to me is screaming a long position. It's still within the trend. The only thing that really took a shake was the lower time frames. Daily, H4, still very, very solid. But I don't want to be involved with gold. I'm much more optimistic on silver. So I think silver has no problem, again, on a fundamental basis, reaching 55 before the end of the year or at the end of the year. That's still my end of year target. The important thing to note, though, with silver is I'm very happy to keep buying dips. This isn't my full exposure. It's not the full risk I'm willing to put on. It's a very small position. So if we do end up coming down to the 50 moving average, or we come down to 44, I can scale in or I can add in. Same thing down here towards 42, and I can essentially just keep buying silver and bringing down an average price and adding in at lower points, because I think this is an opportunity. I could be early, could be wrong, but I am willing to take that risk. So yeah, so far it's moving quite well. Can't complain. But yeah, that's pretty much it regarding the metals. Ball out nat gas. Yeah, I know. With we had a situation. Was it US and Russia? Again, I've not really been overly in the markets, to be honest, or on the headlines, I should say. So I know there was something that happened between the US and Russia, some sanctions with oil, something along those lines. So we did see, obviously, oil prices spike. Nat gas has also done pretty well as well recently, which, I'll be honest, is a bit of a shame because, Ball Out and I have been talking about nat gas for probably many, many weeks at this point. I wanted to see a rejection. I wanted to see price come down towards 2.5 and continuation to the upside as we came back into this really nice trend line. We've not had that. So there was no trade in my strategy or my thought process. Although, yes, I do think nat gas can get to $4. I don't know when, but I do think that is the target. Why I'm in the dark? I'm actually not in the dark. My background is black soundproofing panels. I've got white, what do you call them? Like white lights in front of me as well. So it just comes across that way. But I did it intentionally because on content, so like short form content in YouTube videos, it's a bit more immersive. It just makes it look a bit better, in my opinion. Am I part of Trading X team? Yes and no. No, I'm not part of A1 Trading as staff or as a trader or an analyst, but I do work with A1 Trading in content wise, and you know, that's pretty much it in content. It's so clear. I've been saying it for months. You have ball out indeed. Sluggy, like the background. Good stuff. I think my camera's a bit laggy, but whatever. I always have camera problems. There's nothing I can do about it, I don't think, at this point. So in terms of other open positions, oh wait, hold on. Let me put that back to silver. So I'm completely flat on the S&P. Took my profits. I'm done with that one. I'm now in a swing/DCA position on silver. Still in pound yen. This market's doing nothing. It's a painful trade because the downside of this, you could say, you know, the entry was perfect, if I do say so myself. There's pretty much no drawdown. You know, the only real drawdown I've got is right here, and that was nothing. So, you know, you might say, well, why is that so bad? Well, the bad thing is I'm paying swaps. It's a negative swap market. Actually positive swap market. So buyers get paid, sellers have to pay. So although, yes, I'm actually not losing anything in terms of the open P&L, I am losing money just holding it. So it's a bit of a pain. The other one is New Zealand US dollar. I'm not really too interested in this one. It's a small trade. It's just a DCA short, seeing if we can get the dollar to continue higher. It does seem to be on the way. The monthly is still very healthy. We've still got the bullish formation here that we've seen multiple times, obviously off this sort of multi-year trend line. So I'm just seeing if we can get some sort of pop to the upside with news tomorrow. But either way, I'm not too bothered. It's, again, a very small position. So if I have to close it, I'll close it. Why are you guys talking about orange juice? I don't even know what the ticker is for orange juice. Orange juice cash contracts. I mean, to be fair, you could be a dip buyer. There's no fib, so I can't do it. Obviously, I'm joking. I don't know anything about orange juice in terms of its drivers, so don't take that seriously. Dollar yen continues to prove me wrong, which is a bit frustrating. So I've been saying that I do like dollar yen. Yesterday, I was sat here. I think dollar yen was around this price here. I was saying that fundamentally and technically, it looks great. Like it looks very nice to go long. But again, you know, I keep repeating myself. I'm just a bit concerned about that intervention risk. I don't want to be caught on the wrong side. Dollar CAD. I was looking at this. I'm not sure if I still am. Let me just check. What's the Edge Finder doing? No, dollar CAD's fallen off, so I'm no longer interested. But I was looking at dollar CAD because it was a very textbook setup. We've got obviously low, high. We draw the fib. We had 50% and 618. All of the moving averages converging here, as well as this level also being within previous structure. So technically, it was a very, very strong idea. But it seems I've already missed the move because I wanted to be a buyer during this period here. But there was no real pullbacks that I could get in. So I just had to sit and wait. And now it seems I've missed it, which is a bit unfortunate. What's my take on Bitcoin? Let's see. So yesterday we looked at Bitcoin and it's a bit conflicting, and I can only really give you a price action view because I don't trade Bitcoin, I don't trade crypto. So the H4 is very aggressively to the downside. Buyers try to take control, rejection off a 200 moving average and continue lower. So H4 doesn't look good. We failed to correct the move here from the US-China situation. However, the daily is telling me the opposite. The daily looks quite good, actually. So we've just bounced off the 200 moving average, and we've done it multiple times. You can see wick, here, failure to really break any lower, as well as this being a nice level of support. So the daily is, again, the opposite of the H4. So I'm getting mixed signals, and that tells me I'm not really in a position to be in Bitcoin at all. I don't have any fundamental bias. It's not on the Edge Finder. I don't really know really anything that's going on with this market, other than the US dollar side, of course. But yeah, I'm not overly bothered, so I don't really have much of a direction. Ballout thinks dollar yen shorts. Yeah, I mean, I do as well, but it's just a case of when's that going to happen. DXY can barely make it past 99. Yeah, there's problems, but I can't really justify building a longer term idea until we get that government to reopen. I need to get more data. I got EuroCAD longs this morning, just finished back testing, so I'm going to play a game of COD. Okay, have fun. Gold. Yeah, we discussed gold. I think, well, this is going to make me sound like a bit of an idiot, but I think there's obviously two things it can do. It can move up or down. I think there's an argument for both. I think the argument to move up, which I've already discussed, so I'm going to sort of speed run through it. The move that we had here was rare. It was a large, volatile move that we don't see in gold very often. So I don't think we're going to get a repeat of this. I would highly, highly doubt it. We've also got to consider this was almost half of it was driven by profit taking. It was made up about 40% profit taking. We don't have a fundamental shift or a macro shift in the markets or in the world to really drive gold significantly lower. We've got a really nice buying opportunity here off the 100 moving average. We've seen buyers take control quite nicely. And the trend is obviously very bullish. I mean, I don't think you could argue that gold is necessarily an easy short to take right now. On the other hand, on the flip side of being a seller, again, we've got this 9 weekly candle. Back to the bullish side. We average 8 to 13% downside after 9 consecutive bullish candles on the weekly time frame. We've currently done 8.6, so we've accomplished the lower side of the average. So again, that is the argument to be a buyer. It's like, well, that downside statistic may have already happened and that could be over now, which is why I'm now flipping bullish on silver. Again, on the short side, you could take this into consideration and say that actually this isn't done. Maybe we are going to come lower. And in that case, we could then go down to something like the H4, and you would then want to be looking for a lower high to form. So maybe something like this, where we come up 50%, we retest this low, very typical break, retest pattern, rejection off this fib, and then we start heading towards 3,700. I could completely sort of get behind that idea. I'm not going to start really bothering with it unless we do see some sort of rejection. If we get gold into this level, we start seeing some sort of consolidation, or we see a big wick to the upside and failure to hold higher, maybe then I would consider going short. Again, I'm already long silver, so I've got sort of playing both ways on metal, so I'm not overly bothered about the risk of doing that. So it depends which side you want to go on. I am now leaning more bullish. I had my short, I had my bearish phase, and now I'm willing to pivot back to being a bull. Copper. Interesting. I've not looked at copper in a while. I know it had. Copper's proven me wrong. So what I was saying about copper during this period when it was having this sort of, what do you want to call it? I don't want to call it an uptrend, really. Ascending way, ascending consolidation, maybe. Anyway, my point was during this period, it seemed too easy to be a buyer. It seemed like, those times when you have a trade and it's just so obvious, it's so easy, and then it just blows you out of the water. It just completely melts after, or it rockets after and takes you out. It gave me that gut feeling. I didn't have any reason to think that. It was just through experience and sort of, what do you call it? Like my own personal thoughts on it. It wasn't like a backed up by anything. So I was very cautious. I was saying that I would expect copper to maybe come further down towards 4 and create a double bottom here, which obviously hasn't happened. Copper has continued much higher. So now, if you are wanting to be involved with copper, I would be waiting for a retest or some sort of pullback into these moving averages, then a sort of continuation to the upside, maybe within to this previous high we had, anywhere between, let's say, 5.5 and let's round it up and say 6, because I think 6 is a pretty nice psychological target to have on copper. Nickel, I'm not looking at nickel. You're always looking at funky markets ball out. You should know by now. I stick to the basics. NASDAQ. Let's see. I think NASDAQ's still on the edge finder. It is. It's still, actually, it's just behind the Dow. But NASDAQ is getting a very good reading of 10. I think, to be honest, I know I closed my long positions, but that's because I was pretty happy to just get out of the market, to be honest, and realize the profits and start to reallocate after tomorrow's data. If you are bullish on the NASDAQ and you're obviously this isn't or sort of disregarding or not accounting for tomorrow's data, I think now looks like a pretty good time to be a buyer. Multiple rejections off the 200, pretty smooth uptrend, nice rejection to the downside. Bulls have taken over, and we could possibly come and either retest, break higher. That would be a point. Obviously, if you do buy here, and this isn't financial advice, if you do buy here, price gets these previous highs, it might be an option to trail stops, because then we've got two options. Either we obviously reject again and we have another move like this, and then you could get taken out at break even, or we do break higher and then we can retest, possibly look to scale in and then continue to the upside. But obviously, again, we do have news tomorrow, so it depends what your view is there. If you don't care, then maybe it's a good idea. But again, for me, I wanted to just get out and free up some of the portfolio. Yeah, 5894. Your name is too long. I'm going to butcher that if I try and say it. What's your take on NASDAQ? That is the take on NASDAQ. Ballout thinks copper's going down next. Yeah, I mean, that's the thing. Copper, it just has that vibe. It just feels like a trap. And I can't give you like a good reason why I think that, which is obviously very unprofessional. But that's just how I see it. I took a long on Dow at 46,520. All right, let's have a quick peek. Dow. So you said 46,520. Let's see. Seems reasonable. I quite like it. I'm not sure. Let's just see. Is this a fib? Oops, not that. Is this a fib pullback? I don't think so. No, it's not. Either way, it's pretty much what I said with the NASDAQ. I think technically it looks like a pretty nice place to buy. So I'm supportive of the idea. Again, just watch out tomorrow. Because what we need to factor in is that although, it's sort of an average release of, it's still high impact, but, it's CPI or inflation data. Actually, let me just double check what it is. Yeah, CPI. So the big thing around CPI, in my opinion, this time isn't that it's CPI, it's that it's pretty much the only data we've got. So obviously we have CPI, we've got NFP, we have unemployment, all of the other factors that we have. But we don't have any of this. All we're really looking for, or all we can look at, is CPI. So if you've got nothing coming in, and this is all you can look at, your reactions are going to be much more. So it's possible that even if CPI isn't a huge beat or huge miss or anything crazy, we could still see an elevated reaction to what we're used to. I'm not saying that is going to happen. I'm just saying it's something that I am considering at the minute. As for as someone who does account management, do you feel pressured by your clients? No, I actually don't do account management anymore. I shut it down earlier this year because I was doing it on a spread betting account, but I was meant to move to Bali. Was it Bali or Indonesia? I can't remember. Well, Bali's in Indonesia. Anyway, I was meant to move abroad, but the plans got scrapped, and they got scrapped after I was doing all that stuff. So I had to shut down that side of things to obviously prepare for the move, so I didn't have to deal with business and moving at the same time. So yeah, unfortunately, no, I don't have clients anymore. But yes, I did feel pressure, but it wasn't like I can't explain it. It wasn't like a pressure in terms of, micromanagement, because how do I word this, or how do I explain it? you have different types of people when you're dealing with clients. It could be any type of, you know, if you're a plumber or you're an electrician or whatever it is, you'll have clients that will try their best to micromanage or do whatever it is. They'll try and understand what you're doing. They'll try and learn what you're doing. They'll try and get their heads around it. Obviously, in finance, it's much more significant because obviously that's the money. They have a right to know what's going on and to want to know all, like, everything. But as the trader, that is a pain, like a real pain, because you explain what you can to a level that you think they will understand it. Sometimes that's good, sometimes that's not enough, and they keep going, and it gets to the point where it's like, you know, you're not trying to learn or you're not trying to understand what's going on. You are just trying to micromanage, and I hate that. That's why, you know, that's why I don't work a 9 to 5. I do not like someone telling me what to do ever. And maybe it's an ego thing, I don't know, but if someone, I'm one of those people where it's like, if I'm about to take the bins out and you tell me to take the bins out, I'm not going to take the bins out. And I know that's stupid. I know it's petty, and I know I'm a grown man acting like a child, but I can't help it. Anyway, let's move on. The position is just under the first try. I'm not sure what you mean by that. 2675. Elite traders in the building, indeed. Take on pound yen. I'm currently looking to sell the gap. Yeah, I mean, we're in well, I'm in pound yen. It's not fun, to be honest with you. This is one of the trades where I kind of want to close it, to be frank, but I'm not going to. Obviously, you know, we took the trade for a reason. The reason is still valid, but again, it's a positive swap market, so buyers get paid. It's the same dynamic that we had with well, yen pairs in general. Do you remember when we had the carry trade dynamic? I've got about 6 minutes left. I lost track of time. I just had to double check. The carry trade dynamic, where the markets, yen pairs specifically, would just upside, you know, free money, because people got paid swap. So institutions earned billions, hundreds of millions, billions of dollars, not from profit necessarily, but from swaps alone. And that's the same thing that's still going on. It's just the yield gap has just reduced slightly as the Bank of Japan hiked their rates to 0.5 since then. I can't remember where I was going with this. But anyway, yeah, I think what I was trying to say is that it's just a painful trade because I'm paying swaps to sit through a range-bound market. So although, yes, I'm bearish, it's not a great trade in terms of it's just not fun. That's true, James. People say they have big risk appetite, but don't in reality. Well, risk appetite is really subjective. Like I say I've got quite a big risk appetite. You know, I'm happy to risk 2, 3, 4, 5% even. I mean, 5% risk for me, that's very rare. That's like a once every 2 years type thing. That's if I'm super confident in something. It's a longer term position, and I'm holding it for a couple of weeks, maybe even a couple of months. That's my version of high risk. That's what I would consider like the highest risk I would tolerate, to the point where it would be on my mind, if that makes sense. But I saw someone on Instagram the other day saying that they take 10 to 15% risk, a stock trader, on every position. And the only thing I thought of when I heard that was, if you lose 10 trades, even if you lose 3 trades, it's pretty much game over. Because something that people miss out on when it comes to risk management, you know, you could say, okay, I'm going to risk 10% on every trade. That's 10 losses, and then my account's done. So that gives me 10 attempts. But that's actually not how it works, because as soon as you lose 10% on, let's say, $1,000, you're left with 900. That's really bad drawings, but I hope you get it. So, oops. And then if you risk another 10%, that leaves you with, what is it, 8, 10? I'm actually not sure. I'm not very good at maths on the top of my head. Anyway, every time you risk 10%, your capital goes lower and lower. So that 10% isn't going to return the same as what it should or would in your head. Does that make sense? Do you get what I'm trying to say? So even if you lose 2, 3 trades, the money you earn back on the next trade might not bring you back to break even or back to where you want to be. So that's also something you need to consider. Is, you know, in theory, 10% risk, 10 losses, but it doesn't work like that in reality. Anyway, how long have you been trading? Not how long were you consistently profitable? How long have you been actively studying charts? 7.5, coming up in 8 years actually now, I think. Hey James, hard getting in here as often since doing my own stream. Have a great day. Tiger, you too. Good luck with your stream. Hope it goes well. So yeah, I think risk is a very, very subjective thing. So like DCA for me is inherently quite risky, but the way I operate it, it's not necessarily as risky as some people may do it, because I use very small positions. But I do know of some people who will DCA on 5 15-minute charts, and each position will roughly, obviously there's no stop loss, so it's hard to figure out exactly, but there'll be roughly 0.5% to 1% risk on each entry, and you could end up with 4, 5, 6 entries on a DCA position. So it's all quite personal. I'm never going to really shame anyone for risk unless they're risking like 50% per trade, because that is, that's more of a gamble, really, in my view, even if you do your analysis and you're studying and whatever. But I would say risk is it's one of those things. To recover 10% losses, you need 11%. To get back to 20% loss, you need 25. Yes, exactly. That's it. So the percent you lose, you always need to make slightly more back, just to obviously fill that difference. When you lose 10%, your revenge will kick in. Yeah, exactly. My average risk is about 0.5% to 1%. That's like baseline bread and butter. But I will always look to leverage a position back in, or to leverage some risk back in. So like here, for example, all of these trades were very, very small position sizes. So this was, if I entered here, if it went to stops, it may have been a 0.5 roughly stop loss. But then it moved into profit. So I scaled in, and I scaled in, scaled in. And by the time I closed it here, if it all went to stops, it probably would have been about 2.5% gone. Which is fine. That's, I'm completely fine with that. That's the way I like to trade. And it is what it is. So anyway, I think I'm coming to the end of my segment here. We have got Marco coming on. Hold on, let me just double check. Yeah, okay, cool. You've got Marco coming to take over the show. I assume he's here. I've not heard otherwise. Guys, have a good one. Stay safe. I will see you tomorrow. Don't get margin called, and enjoy the rest of your days. Thank you for having me.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. Let me just make this a bit bigger, like so, and let me open up the Edge Finder and the calendar. Okay, so quite a lot of stuff to cover. In terms of the news, we have had the UK CPI, which came in a bit lower than expected. That was yesterday, so I think we already covered that. Today we have no news, but the big event is going to be tomorrow. So the event that I've been waiting for quite some time now, it is the US CPI. So the CPI is actually going to get released. The BLS, Bureau of Labor Statistics, they have decided to release the CPI number. We haven't had an economic number out of the United States for quite a while now, so this could be market moving, okay? In order to prepare for this event, here is my personal game plan. Just a brief analysis, brief repeat of my thinking. So, we all know that the current narrative is the Fed. So if you look at the DXY, if you look at the dollar index, first, the narrative in 2025 was Trump, tariffs, new economic regime, the DXY crashed. Now the narrative is the Fed. So what will the Fed do? Will they keep the rates the same? Will they cut interest rates? How much will they cut the interest rates? Well, we can look at the Fed Watch tool. Fed Watch tool. And here we can see in October, there's a 98.9% chance of a 25 basis point rate cut. And in December, a 93.6% chance of a 25 basis point rate cut. So pretty much rate cuts are already priced in, meaning I don't think there's a lot of downside for the dollar. I think most of the rate cuts are priced in. I think on the cuts, you won't get a massive drop. You actually may get sort of a hawkish cut where they cut interest rates as expected, but then Powell has commentary about the inflation, which actually pushes the markets higher. And I believe that the CPI will come out hot, meaning the core CPI will come out higher than the forecast. All right. So a couple of reasons for that. First one was if you look at the ISM prices paid graph. Okay, so ISM prices paid. I don't have it here on the screen, but you can do that on your own. Maybe ask ChatGPT, give me the ISM prices paid graph for the last 5 years. You're gonna see that CPI usually follows the ISM prices paid. So lately, ISM prices paid has had an uptick, which could mean the CPI will come out hot. Second reason, the US and Canada are pretty close together as economies. Sometimes the data that is in Canada can be reflected in the United States as well. Recently, we had a CPI print that came in hot, both the CPI, the median, the trimmed, right? You can see, so the forecast was negative. We actually came in with a positive number. I think the Edge Finder should have loaded it. So let's see. Canada. CPI, yeah. So here it is. You can see inflation has increased in Canada. That's another reason, that's another piece of the puzzle why I think the US CPI could come in hot. What will happen if we get a hot CPI print? I think people, investors, traders, they're going to say, look, we have 2 rate cuts already fully priced. Now we have rising inflation. Now we have inflation that's definitely above target. And I know some people will say, well, the Fed doesn't care about inflation, Powell doesn't care about inflation, and you may be right because we haven't been at the 2% target for a very long time, but Powell still mentions inflation in most of his speeches, and it does move the markets. So the news about inflation does essentially move the markets. So if it moves the markets, we need to know about it. Last time it happened, I think it happened right on the 17th of September. So there was a Fed meeting, if I'm not mistaken. Fed interest rate decision. They had an interest rate cut, but it was a hawkish cut. So Powell actually signaled inflation as being problematic. That could happen again. Okay, that could definitely happen again. So you may, just a second. So you may think that the inflation doesn't matter, but during Powell's speeches, it actually does move the markets. Okay. So the DXY, I think we can go up. I think the CPI is an issue. I think it's 2.9%. It may come out as 3%. I think that gets a lot of people wondering, will there actually be rate cuts? I think that let's say signals some repricing, and I think that repricing ends up being bullish on the dollar. I'm actually putting money on the line. I'm already in USD CAD which is in drawdown. So I'm going to have to hide this one. That's an old trade. USD CAD, I'm in drawdown. 2 positions. One was a market buy. The second one was a buy limit. Both of them were signals in the A1 Discord. And I'm in UJ. So if you do want to get these trade signals, UJ is running in profit while USD CAD is in drawdown. If you want to get the trade signals, if you want to get access to the Edge Finder, you can do so by checking out the links in the description of the stream. And you can get a discount with my code, which is MARKO. Okay, so nice discount on both the trade signals, the premium Discord, and the Edge Finder. USD CAD I took, I think, 2 days ago, and UJ I took yesterday. The reasoning was I already considered maybe getting in on a buy limit on the 16th of October. I decided against it because I wasn't quite sure on the new prime minister. I wasn't quite sure on the Bank of Japan. I did some more work. I did some more research. And I personally believe that they're not going to hike interest rates. So if you go to the Forex Factory calendar, you go next week, we can see that we have the Bank of Japan policy rate. Okay, so we have the Bank of Japan policy rate. They're going to make an interest rate decision. I don't personally think they're going to hike interest rates. Essentially, I don't think the yen is going to appreciate. I think the yen may actually go down a bit in value, okay? But the star of the show for me personally is the US dollar. So I think the US dollar is very, very strong. Good data coming out. The US is doing well. We are now approaching November and December where there's a lot of buying of US stocks. You have the Santa rally. To buy US stocks, you need US dollars, right? To buy US stocks, you need US dollars. So essentially, as the stock market goes up, the dollar should go up as well. So that's the reason. And another confluence to buy the dollar, to buy UJ, to buy USD CAD, today is the 23rd of October. In the last few days of the month, in let's say the last 5 or 7 days, you get corporate buying of the US dollars. What is that, you may ask? Well, you have huge corporations, Apple, Nvidia, Microsoft, let's say, basically all of the big tech companies, they do business all over the world. So they receive yen, euro, pound, Chinese yuan, and then at the end of the month, they usually need to exchange foreign currency for the US dollars. That means they need to buy US dollars. That makes the US dollar go up. You can do some quick research. You can ask ChatGPT. In the last 5 years, in the last 5 days of each month, does the DXY usually end up positive or does it usually end up negative? There's like a 55% chance that the US dollar, that the DXY actually ends up being positive. Okay, so that's an extra confluence. And I also know someone commented yesterday, so like, is that the pure reason why you're buying the US dollar? Is your, let's say, trading edge only 55%? And no, it is just part of the puzzle. So I just listed, I think, 3 or 4 confluences why I personally am long the US dollar. All of that tends to create a trading edge that has good probabilities behind it. Much more than 55%, I would personally say. Other than that, I'm in EuroCAD. I'm in a buy setup. Currently, it is in drawdown, unfortunately, but it is still respecting the overall structure. So it is still overall moving to the upside, respecting the lower trend line, which is good to see, kind of bouncing off of that lower trend line. I'm still bullish on the euro. I'm very bearish on the CAD. I think CAD is getting very bad data relative to other economies. So I'm pretty happy to keep holding this position into the year's end. Okay, that is the game plan. We still have 2 more months. I don't mind holding this until January, maybe even more, depending on how the data will keep developing. right now in Canada, inflation is actually ticking higher. So it is above 2%. That's sort of a stagflation scenario. So check out the unemployment in Canada, 7.1% and rising. Check out the CPI, 2.4% above target and rising. That's bad. That's stagflation. That makes the CAD long term, it should make the CAD lose value. Okay, maybe short term, it goes up on the news of the hot CPI, but long term, it should be pretty bad for the currency. Now, time for the comments. Okay, let's see. Going through the whole roster today, or roster, I'm not sure how to pronounce that. If you're referring to the number of guests on the show, yes, Thursday is usually the busiest. Hey Sluggy, US oil, okay. Ball out, Marco, talk about how by tomorrow UJ will drop like a rock. Okay, so I'm really excited to see what will happen. That's fair for JPY also, since inflation has gone down really cool since January. Is it? Let me see. So JPY. Yeah, actually inflation is falling. So that could make the yen lose value because there's no need for higher interest rates. Okay, they can actually have lower interest rates to stimulate the economy. So that's good to see. Oil, let me see oil. Okay, oil is ripping higher. I think there was some news, I saw it, about, Russia sanctions. So pretty much oil has been dropping steadily, and I was getting excited about the gas prices, but now we're back up. So from the bottom, we have appreciated around 9.8%. Whoa, that is pretty high. Okay, that is pretty high. That is a pretty big jump. And it's because of the sanctions. Another reason why I think trading oil is pretty tough. Okay, so trading oil is pretty tough because of geopolitics. You may get a good fundamental reading, and then something may happen in the world, like Russia, Ukraine, Israel and Iran, US and Russia. And now you have Russia sanctions. Again, Russia, and the Middle East. So two very problematic areas. No one knows when the next hit will be. No one knows when the next huge spike down or huge spike up will be. So for me personally, I tend to stay away from US oil, and I tend to stay away from copper. So copper is also pretty tough to trade with these massive spikes up, spikes down, spikes up, spikes down. Okay. Gold and silver. So gold and silver have pulled back quite a lot. They are on my watch list, so I'm looking for buy setups. I'm looking to get in on some pullbacks. I think this is a good price. This is a cheap price with a discount. Although we're kind of getting a rejection off of the 20 MA. Although I think the edge finder is not bullish. Let me check the top setups. So gold, silver. Both are neutral. So I would probably have to wait for a bullish signal here. I think that's exactly what Nick is waiting as well. Do I want to buy at this area? I don't know. We're getting a rejection, so that's good. I'm not looking to get in right now. So I know I was saying about some support levels, but I think it's better to wait things out. I think it's better to wait for the edge finder to kick in, to have an extra confluence to buy, and then I can maybe get in gold and get in silver. So they're definitely on the watch list. I would expect maybe some more downside, some more pullbacks, so corrective price action. We shall see. One thing I've noticed from what I've read, there was the CME raising of margins, or raising of leverage. I'm not sure exactly what. They raised something, and that usually makes gold and silver or silver pull back. So that event happens when you get a massive spike in metals. They raise margins or leverage, they raise something. I'm going to have to do more research on that. And then you get a pullback. So let me actually see it. I have it in my email, so I don't end up looking like an idiot here. So let's see. Yeah, CME raising margins on gold and silver. Yeah, so raising margins. Essentially, they have done it on silver. I think they did it in 2011. They also did it a couple of days ago, right before the top. They raised these margins right before the top, and that's when the sell-off started to happen. So that's a sort of a trading edge. That's a sort of an event where you can actually try to get in on a sell setup and have that as an extra confluence for the price to go down. So it's pretty funny. I think they announced raising of margins right on the 16th or on the 17th of October. So right on these 2 days. It was pretty tough to find the information. So the information was kind of hidden, but if you had access to it, you maybe could have went short. You could have shorted silver, possibly. If you want to know more about this, I'll probably do a write-up in the A1 Discord about the raising of margins and how it impacted the rallies in the prior, let's say, years. So you can learn more. So this is my watch list. NASDAQ tracking higher, sort of sideways up movement. Now we're in the sideways period. Now we're just going sort of flat and corrective. Gold, as I mentioned, I want to get in, but yeah, I'm not 100% sure. I currently like Forex a bit more. I was talking about pullbacks and buying the pullbacks. I would like to get some sort of an extra confirmation. Just maybe Edge Finder top setups. That would be nice. I know Nick is looking for the same thing. So yeah, that's the game plan. Edge Finder, give me some confirmations, and then I can try to get in on the first position. If we do go down a bit more, that could be even more interesting, a bigger discount. So I have some levels set, some levels I'm watching, and we'll see how the story develops. Other than that, I mentioned they had UJ, USD CAD, and Euro CAD. Those are my free trades running. So let me see the comments. Thoughts on the gold push that just happened? So I think it's a really minimal push. It may be just a pause before we continue going lower. So maybe just a small push to the upside. Maybe the sellers have been exhausted a little bit. If you're into Elliott waves, which I'm not really into, but I know a little bit about them, usually the move up is 5 waves. I think Chris Palmer loves Elliott waves. And the correction is 3 waves. I think right now we're somewhere here. So in this small leg, that's essentially how this looks like to me. We can actually do this. Maybe this is like wave 1, wave 2, wave 3 to the upside, and then this is the first wave down. Now we're pulling back a bit, and then we can go down a bit more. Like this would be picture perfect Elliott wave analysis. Again, I don't really apply it for my trading, but I think we can go down a bit more. Maybe these new sanctions on oil and Russia, as you saw oil exploding higher, maybe it created some concern and created some safe haven demand. So that could definitely be the case. Anyway, now I want to mention today's sponsor. So like someone said yesterday, an unskippable ad. today's sponsor is DNA Funded, okay? But we would not be putting these ads if we truly didn't believe in these companies and what they offer and how they can help you for your trading. So DNA Funded is a reliable prop firm ran by professionals, okay? It is one of the few prop firms that we actually trust, but the best part about it is the price. So because you guys are watching the live streams, you have the code A1 Live, which gets you 25% off any of the challenges. So A1 Live, whoops, how to open that window? So A1 Live gets you 25% off any of the challenges. When you apply that discount, you pretty much get a great prop firm for a great price, okay? This is the 50K account. This is where I'm testing my ChatGPT trade signals. Currently, the equity is 49,344. So just being break even for I would say a month now, from let's say the 17th of September. But that's okay. I'm just gonna keep testing it. And that's about it for the channel sponsor. If you wanna get in, if you wanna get a challenge, A1 Live, DNA Funded, check it out. Okay, let's see. Ballout says, trading on ChatGPT has to be the dumbest thing I have heard, with all due respect. Well, to be honest, it's more like a content thing than applying it for my live trading. So I personally, as it currently stands, would never rely solely on ChatGPT to give me trade signals. But because I also do YouTube and there's a lot of interest for AI, I thought, why not create a series where I test ChatGPT trade signals and see the performance. In this challenge, it has just been break even, flat, but in the last 4 months, ChatGPT is up plus 24%. You can find videos on the topic on my channel. So search up Marco's trading journey and search up ChatGPT. You will find the challenge. So I wouldn't rely on it for actual trade signals, but it's pretty fun to test in these challenges and with like small risk. Okay. Marco, what's your bias on the CAD flipping after the news? Let me see. I haven't really looked at the CAD too much. So USD CAD, we can look at CAD yen, let's say. So CAD looks to be appreciating. I mean, it makes sense. It makes sense with the inflation print. So with the CPI, I just think it's short-term movement. I just think it's short-term appreciation. Like even my Euro CAD has gone underwater. Even that is in drawdown now. But I think this is the first reaction. And then later on, investors, traders, hedge fund managers, pension fund managers, they will realize the stagflation picture in Canada. So if we go to the Edge Finder and we go to Canada, like short term is great. Short term is super strong. 75% of the news is coming out better than expected. So short term, CAD is gaining value, but long term GDP is all over the place. It's not stable. Okay. The unemployment, 7.1%. Relative to all of the other big economies, this is really bad. Inflation, I talked about inflation rising. That's not good. That may be good for the currency in the short term, but it's not good for the country. Would you like to have inflation go higher or lower as a citizen of Canada? You would like to see inflation go lower. So Canada actually would benefit from lower inflation, in my opinion. 2.4%, okay. Now, if inflation is under 2%, that's healthy. But the key here is it's 2.4%. So it's above target. So it's too high, okay? Even in the UK, I think it's really crazy. I think it's really high. Yeah, 3.8%. That's a problem. So I bought just before that big push up, wondering if I should hold when there is a big double top. Should I ignore these things? Tommy, You're talking about gold. Well, I wouldn't say it was a big push up. I'm not sure which time frames you're looking at. Yeah, I'm not sure which time frames exactly you're looking at on gold, but I would say this is not a big push. And this would be a big push. This is pretty small, right? Hi, Marco. Hope you're well. Do you know if DNA Funded has an app? I can't see it in the Google Store. I don't think they have an app, but they use TradeLocker as an execution platform. Okay, so they use TradeLocker, which you can have on your phone. I have it here. I can show you. And to be honest, it's the best execution platform that I have used. TradeLocker. It's so simple to use, and you can automatically calculate the risk. So here it is. See? So you don't even need a DNA funded application because you have the TradeLocker app. Joshua says, there he is, big man Marco. Hey, hello Joshua. You're long Euro CAD. Yes. Long Euro Swiss. Elliott wave would land you on the 50 MA daily, wouldn't be bad. Ball out trades Elliott waves. Okay. Ball out has permanent beef with Marco. Yeah, Ball out is really pissed that I'm long the US dollar and he's not. But hey, so far it's working well. We will see what will happen tomorrow. I mean, it's just one trade. Like, you cannot base your trading success off of one trade. You have to look at least 1 year of trades or a huge sample size of, let's say, 100 trades. Ballout has beef with everyone, even himself. I will eventually sell the course. I think that's a good idea. So a Ballout course. Looking forward to that. I got a pretty nice entry on EuroCAD, actually in profit right now. $23 is $23. I would move out of Canada. I would never live in Canada. I'm just kidding. I've never been to Canada, but it doesn't attract me from what I've seen in the videos and pictures. Inflation would be my last concern. You need to be concerned about ICE. I mean, unemployment is high because of the ICE. We're talking about the ICE, or I'm not sure what you're referring to immigration in the US. To calculate risk, use your brain. I used to scalp, and now when I see scalpers go crazy about a 50 pip push on hold, I just roll my eyes. Yeah, so we've been talking about it in the A1 Discord, and there's this new guy that joined, and he's apparently a scalper. So we've been talking about how we have never seen a consistently profitable scalper, which is completely true in my case. Like, I've been seriously trading from 2021, and I've never met, never talked to, never read about a scalper that has, let's say, 5 years of trading experience. They may have a lucky year or lucky 2 years, but the trading edge just doesn't seem to work for that long, if you're relying on purely technical analysis. Now, there are traders at, let's say, SMB Capital that are both scalping and swing trading, but they use many, many different trading edges to develop trade ideas. I'm talking about the pure scalpers trading only support and resistance, or only fair value gaps, or only ICT, or only I don't know what the hell you have left. So that, in my opinion, doesn't work. Having a trading edge where for example, what I told you about silver, that every time there's a huge rally, the CME raises margins, and a couple of hours or a couple of days later, price tanks. That's a scalp. That's a swing trade. That means every time there's a rally, you watch out for the news from the CME. You watch out for news of increasing the margins, and then you sell with, of course, controlled risk. That could be a quick scalp, 2-to-1. Much easier to talk about it than to actually execute it, not gonna lie. So scalping a real trading edge is extremely tough. While scalping technical analysis, support and resistance levels, I don't know. It could be very hard, but I don't think it's profitable long term. Hey, bro, any quick advice for beginners? Yes, my best advice for beginners, usually you have three major problems. First, you have unrealistic expectations. Second, you don't have a trading edge. And third, you don't have enough trading capital. Realistic expectations, the best trader in the world, Jim Simmons, made 66% per year on a sample size of 30 years. That is what you can expect that is not what you can expect because that's the best guy in the world. If you can make 15 to 20 to 25% per year, you're already a massive, massive winner in the markets. Second, about the trading edge, I would highly recommend you join the A1 Discord. You can get your trading edge in there. You can learn everything you need to know, and you can use the discount MARKO. So join us. We talk about trades. We talk about fundamentals, which is what actually moves the markets. And we give you trade ideas, trade signals to help you develop your own trading style. Third thing, trading capital. That's a tough one. You can do private capital. You can do friends and family. You can look at outside investors. You can look at prop firms. There's an option, DNA funded, sponsor of today's stream, so you can check that out. Of course, I wouldn't recommend you check that out because you're a beginner, but later down the line, when you actually develop a trading edge, you can start looking at prop firms. Okay. So, Marco, look at the DXY. The push down has begun. Okay. Let's see the DXY. Okay, so we are kind of break even on the day. Anyway, the game plan is tomorrow we have the CPI. I will be streaming at I think it's 9 a.m. Eastern Standard Time tomorrow. Anyways, it's gonna be half an hour later after the CPI print. So you can catch me tomorrow. We can see the result, if the inflation will come in hot or not, and how the impact is on the markets. I have my positions in. If the inflation print is hot, UJ and USD CAD should appreciate in value. It's going to be interesting. Make sure you join. I will be live streaming probably later today in like 1 hour on my personal channel, so you can catch me if you want to discuss more. Good luck in the markets, and I will see you tomorrow. Okay, don't miss it. See you. Goodbye.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.